I'm getting the stream ready.
Oh, no worries. Take your time.
Mario.
What up, Trip?
Nothing.
You don't got homework?
I did it in like 30 minutes.
Good to hear, my man. Stay on top of that.
Yep.
How's it going with Fidget? Have you been learning from him? I know he teaches differently than him, and I have similar, teaching styles. But he's mainly a scalper.
Yeah. He's just been like we went over some swing trades I was trying to make.
Yeah.
And yeah, yeah, that's it. I guess I'm gonna test some stuff out tomorrow.
Yeah, man. Keep trying.
Yeah.
It's the only way you're gonna get good.
Yes, sir.
How's SoCal treating you? Pretty good. It's been raining out there now.
Yeah, it rained like a couple of days ago, and then the tree caught on fire.
The tree caught on fire.
Isn't it windy in Cali?
Yeah, man. It's been pretty bad up here. The Scooop and Fidget were telling me that Scoop's fence just got blown down, so he has to build it from scratch.
Oh.
Yeah, he lives out kind of closer to Sacramento. It's a little bit windier out there. I live more closer to San Francisco, so it was pretty windy, but not too bad.
I see.
All right, Mario.
Did you see that? Oh, go ahead.
Stream's up. If you want to go ahead and share your screen so I can copy or.
Oh, that's right. That's right. Sorry about that. There we go.
Good luck, Mario.
Thank you, Trap. I appreciate that.
All right, it's all set. Just let me know when to start recording.
Yeah. Can you guys mute your mics, please? If not, I will permit mute you, and you will not be able to ask you questions. I'm giving you guys the opportunity to do it now.
Hi, Mario.
Hey, buddy. How's Hawaii, man? It must be beautiful out there.
Who's that you're talking to, Mario?
It's good.
Alrighty, guys. I think we'll get started. Go for it, Hostel.
It's all set.
Alrighty, boss. Thank you. Alrighty, guys. I know a lot of you guys are here to get a better understanding of what's going on with the whole WSB situation and GME situation. And I'm not really going to spend too much time on it. I think there is some educational purposes that you guys can take out of it, which is kind of what I want to cover. And that's the concept of short, of like what exactly is a short squeeze? What happened? As you guys all know, WSB had their own private Reddit or subreddit. They have their own Discord, and they pretty much, literally, they call themselves degenerates. It's a bunch of guys who, in my opinion, don't have any idea what it really means to trade. They don't care about fundamentals. They don't care about anything. All they care about is about getting rich. So they finally rallied together, and they noticed that GME had a really high short float percent. What does that mean? Pretty much every single stock out there has a short percentage. How much of the actual shares that they have out there are being shorted? In this case, it was really high. When they noticed it, it was already at 130% short, which means that they're shorting more shares that are actually available. And the first question is like, how is that possible? So pretty much the way it works is that if someone decides to short shares via their broker, they have to borrow those shares from the broker. So they're borrowing those shares, and the broker then borrows it from someone who actually owns the shares. So then in theory, when they short the shares, that's the short part. And what they're trying to do is, let's say if they buy GME at $10 and it goes down to $8, they're making money off the difference between the $10 and the $8 difference. That's how they make money shorting stocks, essentially. Like, I'm trying to make this as easy as possible for you guys to understand. What happened, though, is with WSB buying a ton of GME shares at the same exact time, it caused essentially for the stock to go up. And because they're buying the stock, these giant hedge funds then have to reshort the stock again. So they're buying shares that these other guys are buying, that these WSB people are buying. They're shorting that because the brokers are then borrowing the shares that the WSB people and the Reddit people were buying. So then it becomes this self-fulfilling circle where people keep buying, the share float percentage keeps increasing, but the stock keeps going up. And essentially the hedge funds were just killing themselves. And that's how you saw those massive spikes, and you're still seeing those spikes. Because the percent keeps going up, and these people need to cover their losses because they have to pay premiums on the shorts when they go up. Hold on, let me make sure everyone's muted. If you guys can, please mute your mics. Shouldn't be too hard to do that, please. But yeah, and congrats to anyone who made money off of this. I don't condone it. I don't think it's okay, but I also don't think it's okay for these giant hedge funds to be controlling and manipulating the market in the same way. You clearly saw what was happening in Robinhood. We saw it happen across every single broker. And we need to understand that these hedge funds have a lot of money, and they have a lot of power, and they have a lot of connections. So I applaud WSB for what they did and sticking it to the man, because I'm all about that. But at the same time, I don't want any of you guys caught when the rug does get pulled eventually. And I think that's what you guys need to pay attention to is if you still have positions, I highly encourage you close out as soon as possible. Because all you're really doing is gambling. That's essentially all you guys are doing. And if you took advantage of the opportunity, great. I know Shark took advantage of it. I think Stock Daddy took advantage of it. That's fine. Again, personally, I don't condone it. I just don't think it's safe enough to do so. But I wanted you guys to understand why it was happening. And essentially, it was just the short percentage float. People took advantage of that. And it was just a self-fulfilling prophecy. Eventually, it was all just going to collapse on themselves. But enough on that. If you guys have any more questions on like the whole GME WSB thing, we can talk about it later. I really don't want it to take up too much time of this lecture. In the first part, I'm going to go over a couple of the stocks that we looked at last week. And I'm pretty sure a lot of you guys, of the guys who were here last Sunday, can remember I called out Blink, CRSR, SBE, Pets, Apple. I don't know if I called out Workhorse, but RKT we were already in, so I'll add that one into it. And let's start with CRSR because I kept crying about that one so much. So if you guys can see right here, I really wanted to enter CRSR at 34. And I think we'll start here with support and resistance. For the people who have seen my lectures in the past, we need to understand that support and resistance aren't 100%. Sometimes it hits it, sometimes it doesn't, sometimes it bounces off, and sometimes it doesn't. And in this case, it didn't. It didn't even reach it. It didn't even get close to it. It went to 35, 38. And I know a couple of you guys got in around the 36 mark. And I really wish we did. It's these occasions where I like entering a little earlier in my plays for that reason. And I know a lot of you guys always wonder, it's like, why does Telio get in early, or why does Shark get in early when we know it's going to go down? Well, this is why. This is exactly why. Because it doesn't always go down. You could save $1, right? Getting in at 35 or even 36, save $2, or never get into the play at all. But because we trade shares mainly, all we would have to do is average down at 34 if it got there, but it didn't. And I missed it, and it clearly got up to $50. Now imagine catching a play from $36 to $50 in a matter of 4 days, or 3 days in this case. Incredible. But we missed it, and that's okay. And this is what I try to implore to you guys when you guys are emotionally going over like, oh, I missed this play, I missed that play. Plays like this happen all the time. The last play we had was Beyond, and it went up $20, $25, I think. It's okay. Don't worry about it. If you guys look, it's approaching another support line. And hopefully we'll catch it back here. All right, let's move on to Blink. Let me find it for you guys. Sorry about this. Here it is. This one, again, it was that day that SPY took a dump, and there was a lot of volatility in the market. Again, it never hit the 42 market, but on Sunday, I think on Sunday it was right here, and I said, "Hey guys, pay attention to what Blink does on Monday morning," and it did exactly that. It never reached the 42 exactly. It got pretty close. So at 43, we could have entered, and literally the next day, it hit 63, another $20 change. So just imagine if we would have gotten in, how much money we potentially could have gotten. And I just want to show you how easy it is to spot these plays. And again, I'm going through these ones a little quickly because I want to get to the main part of the lectures, like how I find these, how I catch these plays. These plays are everywhere in the market. And I need you guys to understand that. Stop looking at the same 10 stocks you guys are always looking at, like the hyped ones. I promise you, there's so many other beautiful stocks out there that you guys can find that aren't called Tesla, that aren't called AMD. No offense to those two stocks, but like half the time, that's what you guys are obsessing about. And there's these other beautiful stocks that are way cheaper that you guys can afford, that are very volatile, and you can make a lot of money on, that follow channels and trends. The next one, SBE, did the same thing that same day. But again, it didn't hit the support. Notice how it just stopped at 35. Like it didn't hit this 35 mark where I really, really wanted it. It got to 36. And again, I think moving forward, we will be getting into positions just a little early. And yeah, sure, we might have $1, we might have a $2, pullback, but that's okay. We can either average down or just hold. But that secures our position within the market. And it spiked. It spiked literally to exactly what I said it was going to hit, a high 44. So we'll move on from that one. This one's going to hurt you guys because I really, really, and it's going to hurt Hostel too. And we were talking about it later. Pets. Look at that. We were supposed to get in around, well, Hostel wanted to get in below 29. And I kept telling him, it's like, let's get in at 29. He's like, no, we have to get in at 28. I was like, no, Hostel, we have to get at 29. Look what happened. It shot up to $56 from literally from $30 all the way to 56. And these are a couple of plays that I missed this week. All right, I need to mute right. Cool. All right, back to the show. So yeah, these are just a couple plays that we missed, and that's okay because we're having this pullback, we're having this correction. I think a lot of these stocks are actually going to go back to where they're originally in. Again, I'm going through these guys, this a little quickly. I just wanted to show you guys, these are plays that I called out on Sunday, almost as an incentive for you guys to come back to the lectures, because I do show 3 potential plays at least minimum for next week that have potential for you guys to look out for yourselves. Again, with these lectures, I really just want to encourage you guys to do your own due diligence, to do your own TA, to chart your own stuff, and find plays on your own. And that comes with time, and that's okay. The last one was Apple, and I think we talked about it as well. Where is it? Apple. You know what? Maybe I should just type them. And I think on Sunday, it was either already at this or I don't remember. I don't remember the exact date, but I told you guys we really need to see what Apple does on the next day in order to play it. And this is the one that I made you guys chart. And the reason I made you guys chart it was exactly for this reason right here, because they had earnings. And we would have entered around the 126 mark, 127, gone all the way up to 144. These are really easy plays. These are all plays that we all could have entered and we missed, but that's okay. We're just going to move on. Alrighty, guys. So why I really wanted you all to come up and why I really hyped up this specific lecture, and I really want you guys to understand candles. So I legit made a whole PowerPoint for you guys. I want to make sure you guys can see this. And now for the more experienced traders, you guys know exactly how candles work. In case of a bullish candle, guys, a bullish candle will be represented with a green color. And it usually opens at a lower point and it closes at a higher point than what it opened. these parts right here, the highs and the lows, those are wicks. You can consider those extremes. And in the case of a bearish candle or a candle that is going down, it opens higher and it closes lower. Okay, and I'll repeat that again. Bullish candles are candles that want to go up. They open lower, they close higher than the original open. And in case for a bearish candle that is going down, they open higher and close lower than the original open. Let me mute someone else. Hold up, guys. There we go. This is another slide that's just a little bit more detail, guys. When and the reason I'm starting here is because we're going to get back into support and resistance, because I remember when I first asked for homework and I wanted you guys to chart support and resistance, a lot of you were sending me support and resistance that were crossing the body. And the goal here is to draw support and resistance at the bodies, below the bodies, or at top of the bodies. So the resistance would be at the top of the body and the support would be at the bottom of the bodies. These lower wicks and these higher wicks are very important. Now, they don't hold as much information as like the actual body. This body right here is what shows the information. Whether it was a bullish candle or whether it was a bearish candle. But these highs or lows are the extremes for that day. These are points where it touched it, but it didn't really put enough information in there for it to hold it. So it came back down or it went back up, depending on where we're going. So let me go back into the actual charts and we will be charting support and resistance for a lot of you guys. Just a little quick recap. And then we'll be going into one of my favorite candles that I like to use to spot a lot of my plays. I don't use this all the time because it's not 100%, but I think you guys will get a lot of use out of it. Let's chart RMO because I know a lot of you guys are in that trade. And we'll use this guy for this trade. It's blank. I haven't charted it. I haven't looked at it. So this is fresh for me. Now, how I would do this. So again, a lot of you guys recap. Sometimes it's okay to use a line chart. It's actually how I started drawing support and resistance lines and how I got really good at it. The reason why I encourage new people to use line charts is because the support and resistance are a little bit more defined by the peaks. In this case, you have a resistance right here, and you kind of have a little support right here. How do I find that? When I dictate support and resistance, I want to look for 2 points or 2 peaks in this case for me to be able to draw that line. Now, there's not a lot of information because RMO is a newer stock, so this isn't the perfect thing. So this is where you take the second step and you go in with actual candles. And with the candles, you'll see that even though we drew this with the lines, it's not bad. Like it's kind of close, but personally, I would probably put it right there because we're hitting 1 candle, 2 candle, 3 candles, and I think that's it. Maybe this one, but I don't like to count it. Again, so going back to the slides, right? Here's the body of the candle. I will put support at the bottom of the body. Okay, at the bottom of the body. Sometimes when I assign homework, you guys just put support here and I'm like, it's not hitting any of the bottom of the bodies. You guys really need to focus on putting it at the bottom of the bodies, as many as we can. In this case, oh my God, where'd it go? Right there. So 1 body, 2 bodies, and then the 3rd body, which is right here. Now resistance, same thing, top of the body. 1, 2. And this is where the wicks come in, right? In this case, you have 1 guy right here for the resistance, 2, 3, and then see how this specific candle, the top of the wick touched that resistance line? That's where wicks come in handy. So it respected that resistance line and it still went down after. I think there's actually a better support than that, in my opinion. Let's see if we can pull it a little bit more down. It's at support. It's at one of them. So this can be considered support, and I know a lot of you guys are in RMO right now. This is a key moment right here, We're finishing a downtrend, and we have to see what it does tomorrow. Personally, and I don't want to scare anyone that's in this actual play, I think it's going to keep going down. Just off of volume alone, the way the candles are looking, I don't think this is going to go back up, and which is good for me because personally, I want to grab this at a lower price anyways. I think there is another support down here. You guys see that right there? We hit two bodies right there. I can see it coming down to probably like the 1550 range. I don't see why it couldn't. And even the wick of this candle shows that it could definitely reach that. So again, guys, just a quick recap on support and resistance. I'm not going to go too heavy on it. I really want you guys to pay attention to the candles. Pay attention that you're hitting the top of the bodies for the resistance and the bottom of the bodies for support. I don't think I clarified that on my last lesson, so I wanted to clarify it this time. Now, this is probably my favorite candle to use. Now, this is a hammer, and the reason why I like to use hammers, and there's different variations of them. There is the inverted hammer, there is the shooting star, there's a hanging man. They're all different forms of the hammer. Now, does this work 100% of the time? No, in the same way where support and resistance did not work 100% of the time. But with the hammer specifically, the candlestick is formed from a short body with a longer wick, primarily found at the bottom of a downtrend. This is the key part right here, primarily found at the bottom of a downward trend. The pattern will show that these were selling, that there was like selling pressure during the day, but ultimately the buying pressure prevailed. So pretty much the candle opened up here. No, it opened down here. It went up. Buyers pulled it back down. Sellers pulled it back down, but then buyers pulled it back up. And they can both be red or green. Personally, when it comes to reversals, in this case coming out of a downtrend, the green ones will show you better signs of reversal. And if you can catch them at a support, that is when they're at their strongest. And I'll show you guys a couple examples right now on how they work. Okay, so here we have Big C. It's actually a stock that I regret not buying. I was supposed to enter around here in the $59 section, or no, it was actually, yeah, the 59. And it ended up going like in the high 90s. And yeah, this is one I really wish that I caught. But what I want to show you guys is this beauty right here. This is an example of a hammer right here. Notice how it came after this downtrend. It just followed it, and then it appeared right there on a support line. And as soon as we hit this, if you would have bought in right here, this would have been a great entry. Look what it did. It followed the beautiful, perfect uptrend. This is probably a perfect example. Personally, some people like to have the wick a little longer. I've noticed that the longer the wick, the more definite that the candle will actually have a reversal or show some type of reversal. But this is okay. There's nothing wrong with that. I really liked how it bounced off the support. And in this case, yeah, it just worked out perfectly. Sorry. Alrighty, guys, we'll move on to the next one. Workhorse. And shout out to Zabes for catching this guy. I wish I caught this. And you guys will be seeing this Workhorse chart in a lot of these because it actually happens. It actually has a bunch of these candles in it. And you could have played Workhorse so many times. And I think we've caught Workhorse at least once or twice already. But this guy right here, it's this candle. And that's actually where we entered. We entered right around here. And it came off of, again, the downtrend doesn't have to be extreme. In this case, the downtrend was only a couple days. But we caught it around the 2021 mark. And that's where it showed the reversal. How you can stack different indicators or different types of different types of indicators on top of each other. In this case, it was bouncing off support. It created the hammer, and we saw a declination of volume. All right, volume was declining as we were going down this downtrend, which showed me that sellers were not going to be in control anymore. And the day that the hammer got formed, notice that volume surpassed the day before. So it was a bunch of indicators for me, and that's exactly why I jumped into Workhorse that day. We had a downtrend, and then we had the hammer formation. Volume was becoming lower, so I knew sellers weren't really in control anymore, and that same day, volume surpassed the day before. That was the confirmation for that specific. And look what it did. It went from pretty much from 2021 all the way up to 27, and we all know how much we all got paid out for this play. So this is something that I saw, and I hope after this lecture, you guys can see this in your plays as well. 1 second, guys. Okay, the last one. What's up?
I can't see your mouse, so I don't know what you're pointing at half the time.
Oh, you guys can't. So like, if I'm on this PDF, you guys can't see it.
No.
No, we can't.
Oh man, that's a bummer.
Got what you were saying though.
I was wondering if my screen was frozen.
Well, I'm glad you guys called this out. Oh man, and I prepared this whole thing for you guys. It took so much. Okay, if you guys are patient with me, then I'll go to the live chart. Like I can find these in the live chart, but I'll probably be jumping back and forth from this whole doc that I created for you guys. Okay,
Yes,
okay, let's do that. Oh my god. Thank you guys for telling me. SDC, if you guys remember SDC, and I even called it out, I was like, hey guys, SDC is gonna rip tomorrow. And everyone in the comments were like, how do you know it's gonna rip? How do you know it's gonna rip? I'm like, let me tell you. And here it is. We had this huge downtrend. And you guys can see this mouse, right? Like I'm not wasting my time on this one.
Yes, sir.
Okay, cool. So
Yeah,
we
we
had
can
this
see
huge, we had this huge downtrend, and we had this support line that I've been tracking for a while. And for the guys who watched my last lecture, you guys know what channels are. So SDC has been channeling between this 1070 and this 1260. But on top of that, we had this trend that SDC was also following. It respected it to a T, like right here, right here, right here, and it came down to it. So let's count how many things we had going for it. And this is exactly why I knew it was going to rip. So it came out of a downtrend and it formed the hammer, like a beautiful hammer. Not even like it had a long wick, had a good head, good body. We had it at support. So that's already 2 things, right? We had the trend line, 3 things. And then we had a declination of selling right here with the downtrend. Volume was dying. Volume picked up on this day, but the next day it did not continue. So there was no validation for that red candle. Because if sellers were still in the market and we were going to get passed through this support, the volume had to be greater than the day before in order for us to continue. Because volume was less, we saw this weak red candle. And again, guys, this is a super technical lecture. So I really hope you guys pay attention to all of this. And of course, it's recorded. You guys can always go back and study this. But in this case for SDC, we had this hammer. It was still undersold in stochastics. And what did we see? We saw a rip. We went from 1076 all the way up to 16. Now, this was my fault. And I'm a very conservative trader. And I think most of us cut around here at 1256. So it was a quick, like, $2 trade, if anything, right? And whatever, how many shares you buy. I think I made like a quick $75 to $100. I forgot how much I made on this specific trade. I think in the long run, I think we should have held. And there's, again, multiple reasons. Because I had so many things stacked for us for it to rip, I had a feeling it was probably going to respect this trend line. And the other main reason was the volume. This volume candle was too big. Hold on, let me mute this guy. This volume bar was just too big for us not to pay attention to, and I think this was like the same day that Spy took a dump, so I was becoming emotional. I was like, oh man, like I don't want my team to lose. Let's just secure the profits now, and it did. And I remember it ripped back down to like 11, and then it just shot back up, and it continued going. So in the future, maybe I'll leave a couple runners, but you guys can see it all right here. If you guys see this, something close to this, take advantage of it, because you have so many reasons of why it should go up. Now, this doesn't always happen. Again, I'll show you guys occasions where this does not work, because I don't want you guys thinking if you see this exact sample that it will rip. Things always happen. Right now we're in a bearish market, I would say. So be careful at the end of the day. But this was probably like one of the biggest examples I wanted to show you of how a hammer, trendline, support, volume all played in one together to make such an easy play. And I know a lot of you guys made, pretty good money off of this play. All right. Let's go to, where are you? The next guy, inverse hammer. Very similar to the regular hammer, but in this case, the candlestick is similar to the regular hammer. The difference is the upper wick is extended. It's not below it, it's above it. Same thing though, it's following a downtrend. Sellers wanted to take over, but they couldn't have enough pressure on it, and the buyers prevailed. So the examples I had again were Workhorse. So Workhorse, TJX, and AYU. Let me write those down so I'm not jumping back and forth. So TJX, AYU, and Workhorse, because they had it in all of them. Let me find those for you guys on the actual chart so you can see my mouse. Let's find Workhorse first. Here it is. And this is what Zabes found. This right here. And I'm kind of jealous of it. This is where Zabes entered. He entered exactly right here. And I don't know if he used the inverse hammer as the play. Like, I'm not going to say this is exactly what Zabes was finding, because we all have different forms of trading. But I can see why. In the same way where we use this hammer right here for Workhorse after this small downtrend and it popped, we had an inverse hammer right here and it popped. Now, we have another inverse hammer up here. Does this mean that the calls that this stock's going to go up? Personally, I don't think so. But in this case, because they were kind of forming a mini support down here, this is look, it had one of them, two of them, almost three of them back to back. And in this case, volume was increasing over time. This is why Workhorse popped right here. You could have used this as a reason to, but mainly because of this downtrend. Remember, when they come off the downtrend, when they come off that, and they come off of support, that's when they're the strongest. Now, the other one was AYU, which I think a couple of us are in that leap. Where are you? I have to find them now. Sorry, guys. I had it all picture perfect for everyone, and let me go back. Sorry, guys. Where is it? Ah, there it is. Now, in this case, I actually had to go a little further for it. Remember when I said that if the candle is green when it comes to reversal from a downtrend, they're a little stronger. That doesn't mean that we can't use the red candles for confirmation. They just don't work as much. I prefer, if you're coming from a downtrend, to have a green candle for confirmation. And if you're coming from an uptrend for reversal to downtrend, to have a red candle. And in this case, God, man, where is it? I can't find it anymore. Sorry, guys. All right, I'm gonna skip it because I can't even find it on my own. I am so sorry.
Hey,
We'll just go
Mario,
to DJ. What's up?
can you change your crosshair to like a mouse pointer or something? It's a little hard to see on YouTube.
This one? Is this better?
I don't see anything.
Really?
Yeah, I don't see anything now.
How about now?
I can see that.
Is this okay? Is this better than nothing?
Well, I mean, I guess it's better than nothing, but that's the
Go
one
to-
people were having a hard time
Go to your
seeing.
settings and make your make the line white.
Make these white?
Yeah, see the line?
This one, the blue one? You want them white?
No, like your crosshairs.
Oh. Sure. I never thought of doing that. Settings. Visibility? No.
Your like mouse disappeared.
Yeah, I don't know why that's happening. Was
You
that
can see your
happening?
crosshairs.
Was that happening in the last lecture though?
It's like when you click on the screen when you're switching,
It doesn't show anymore.
but like at the beginning it was.
Does it show the little circle at least?
I don't see a circle.
We can see the
Just a
crosshairs,
crosshair.
but
Oh my
It's in
god.
settings.
So settings. All right, we'll work through this, guys.
like it wasn't the
Settings.
PDF. I don't
Chart
think.
settings. And then crosshair. White.
Yeah, try that.
Let's make it thicker.
Well, I was gonna say instead of making it thicker,
Oh, that's too thick.
maybe make it a solid line.
There.
So
Crosshair, solid line. I don't think it has anything specific for like the arrow though.
That'll be good enough.
Yeah, that should be fine. See what it looks like. Okay, I think that's better. Yeah.
Can you see the arrow?
No, I don't see
Yeah, that's
arrows.
beautiful.
Can you see the dot?
Yeah, that works. That works.
Okay, we'll use this, guys.
Mario, I got my
Call-
slides ready if you want me to interrupt.
Bro, I feel so bad, man. I worked so hard on those slides just for them not to be visible to people.
I think we can see it a lot better
The
now.
slides are fine. It's just the mouse. That's all.
Yeah, but I don't want to like jump to the slides if they're not, if they're not working. But in this case, guys, this is actually the example I wanted to show. I was getting ahead of myself. So this is an inverse hammer right here, but it's red, and that's okay. Again, we had a huge volume spike right here because of the ER, but notice how volume was decreasing, and that's where the inverse hammer came in. And then we had a spike in volume for the green candle, for a bullish engulfing candle, of course. And after that, it followed the beautiful trend up. So keep an eye out for these guys as well. I've made a lot of money off of both the hammers and the inverse hammers. Let me go back to the other section. So yeah, I've made money off of both of these type of, plays. All right, next one, Hanging Man. And shout out to Noodle because he actually put this on the quiz. So clearly it's a significant candle if Noodle's willing to put it on the quiz. So pay attention, guys. Again, very similar to the hammer. And these are all almost kind of based off of each other, based on the concept of the hammer. But this is more of a bearish. So if you want to buy puts, if you're showing signs of reversal, this is something to keep an eye out. And we'll go to the stock. So we're going to have Workhorse, Home, and AUI. Alrighty, guys, let's go to AUI first. I remember seeing this one specifically. Now, sometimes the hammers or the hanging man in this case, they aren't perfect. It's not, and not everything's coming down to a T. But in this case, we had this uptrend, and then we had it kind of like right here. This guy right here kind of showed the significant that we were going to have some type of reversal, and boom, it just started going down right after that. Now, again, all of these work best when they're at support or resistance. And in the case of Hanging Mans, they work great when they're at a form of resistance. and you do have a small one up here. It's not the best resistance in the world, but it's simply like we were near pretty, not even all-time highs, but we're pretty much in the highs for AUI. That's been, channeling between like the $5 to $6 range. So this kind of gave me significance that we were going to have a change in direction. The same thing happened in Workhorse, but this is a more better Hanging Man. This guy right here. Even right here. Both of those, like you literally had two back to back. This is probably a textbook definition of a Hanging Man though. This candle right there. I'll move the crosshairs. We had this beautiful uptrend, and then boom. You just get stopped out right here. Like I buying a put right here, poof. That would have been really nice. And look exactly what happens. It just goes down. Now, again, this doesn't work 100% of the time, but it happened a couple months later, a couple weeks later. Did the same exact thing. You had this Hanging Man. Normally, I don't like the wick on the top. Like if you had a closed body like this, these are the best type of hammers, inverse hammers. Like if they don't have an extended wick, if you have a little bit of a wick, that's fine. But in this case, we had the uptrend, and you have the hammer, you get the reversal, and you make profit. Easy. Happens every single time usually. But again, doesn't happen all the time. I can't say that happens every single time because one of these days we're going to have a chance where it doesn't work out. And I don't want you guys saying Mario told me it happens all the time. So it's Home. Home is another one. I think Bori caught this one actually. Where are you? It's right here. Even right here, which is the funny part. And again, they're both green though. This is what I mean though. Just because they're green, it actually has multiple of them. It has one right here, it has one right here, and it has one right here. But this is the one that I actually wanted to show you guys an example. You had this uptrend, and it hit resistance. These are the ones that I personally like to trade. If they don't jump off of a resistance, I don't play them sometimes because I don't have that second confirmation. When it hits off of a resistance or a support, in this case with the Hanging Man, we want to see a bearish transition. We want to see a change. This is where the money's at. When you have a solid resistance line coming off of an uptrend, this is money right here. For all my bears out there, you could have made a lot of money off of this play right here. Okay. We're moving on to the final candle that I personally like to use. And again, sorry guys if this is a little, I don't want to say boring, but this is a more technical lecture. I warned you guys earlier before, but I hope you guys get a lot out of this. And it's the shooting star. So it's very similar to the inverse hammer. But again, we're looking for a downtrend in this case. Here, I have to mute someone, guys. Sorry. Who is it? I guess they muted themselves. Thank you. So yeah, shooting star. Very similar, coming out of an uptrend. And then we're going to look for signs of reversal in the potential direction of it going down. Hey, also, can you mute whoever that is? I can't catch them. There it is. I got him. No, it's okay. He muted himself. It's fine.
Caught him like a fly.
It's okay, guys. So again, Workhorse had him. Lumber had it. And Virgin. This is actually something I kind of want to call out for the future. So SPC, LL, and Workhorse are going to be the final three that I want to show you guys. In this case, let's do LL because we found it by accident. So shout out to Zabes for finding this guy. And it just happened to have a inverse, and it's right there. Again, this one was green, so it wasn't the perfect example. But again, it was kind of jumping off of this resistance line that it has. So it had the uptrend. And as soon as it kind of formed that shooting star right here, even though it's green, like I said, in this case, we want to see a red candle for more confirmation. It's okay to see the green one. and boom, it just tanked. Again, I would use the resistance as 1, the shooting star as 2, and then the volume wasn't really too crazy. So there's that one. Let's move on to Workhorse. God damn, man, it shouldn't be too hard to ask y'all to mute your mics. Cool, perfect. Right here. This is one of them. And this is like this is one of them right here, and this is forming one of them right here. But this was the sign of reversal for me. We had a huge increase in volume on that specific day. Volume was dying the day before. Then it shot back up, then it came back down. And in this case, it's happening all over again. And this is why I was kind of saying earlier that like I kind of have to see what happens with Workhorse these next couple of days, because this is kind of giving me vibes that it might come back down, especially because it's at all-time highs. So we have to kind of keep an eye out for Workhorse and see what's going to happen in these next couple of days. Personally, I see it coming back down, maybe coming back down to retest this like 27, 28, which is now going to be support, even though back then it was a resistance. Remember, if the stock passes the original support or the original resistance, that resistance then becomes support. And the last one, SPCE, which I'm excited about for next week. Where are you? You're right there. This is giving me like huge signs of reversal. And I hope it does, because this is something I actually want to play. We had this huge uptrend. And it tested resistance once, it tested it twice, and then it formed the shooting star. Like, if it's up to me, I really think it's going to come back down and test this 28.29. Like, I really think it will. And you guys can hold me accountable to it, because a lot of stuff that you guys do hold me accountable ends up happening, so I'm okay with that. But in this case, I don't see it surpassing the 46 resistance, and I see this coming back down. I actually have plans to maybe play a put on this, but again, don't quote me on that. I just see it. It's oversold. There's not really any... Pardon me? I don't see any reason for this. Let me mute Herb, sorry. And yeah, that's really it, guys. That's it for the lecture today. I thought it was actually going to go on a little longer. Actually no, because I always promise you guys future trades. So let me grab you guys those. I have those written down actually. So I have future trades that we're going to look at right now, and then future trades that we're going to look at right now, current trades that we're going to look at right now, and then I'm going to give you guys homework like always. So RMO, even though we talked about it earlier, I need to see what it does. And we need to keep an eye on this for people that aren't in the play already, because I think that it's going to hit this 1550 right here, and it's going to test it. We really have to see. Volume surpassed the day before. I know it's undersold on stochastics and it's following this perfect, but it's still in this downtrend. If we can pick it up down here, or we have to kind of see where it goes, I think this will be a big play long term. Because if we can catch it down 15 and not even ride it up to 37, if we can ride it up to 25, 28, we would have to see, we'd have to, where's the next resistance on this guy? Probably around here. If we can ride it up to 23, and if we can smash through 23, that's money. Like, we're going to make a lot of money on this play. So RMO, keep an eye on this one, guys, please. I told you guys to keep an eye out on these other plays, and they all hit. Please keep an eye out. That doesn't mean to buy them. I just really want you guys to keep an eye out, because we are in a bearish market. I don't know how much more this is going to go down. SBCE, I think we just talked about it, so I don't know if I should go over it again. But Big C is the one that I want you guys to keep an eye out next. Let me just type that one in for you guys just to make it easier. 1 second, guys. No space. This one. We need to see what Big C does. If Big C breaks the 65, it's heading back down to the 59 level. And this is where we pick up shares. This is where we pick up leaps. This is where you can pick up option calls. Not only that, but it has an ER in February 18th. I think we have a lot of potential with this. And if we can catch it again from the ride up from 59 back up to the high 80s, high 90s, we will make a lot of money on this stock right here. And it seems to follow it, it seems to follow this little channel. Let's see what it does. And the last one, and for homework, guys, I want you guys to chart out VRM. You guys know how I like it. Chart on the one daily if possible. Send it to me on a screenshot and I will critique it. I will give you guys feedback. Please do this. I feel like a lot of you guys are learning to make your own plays and it makes me very proud and very happy. But that is pretty much it for today's lecture. If you guys have any questions, I'll be more than happy to answer it regarding the hammers, regarding support and resistance, trend lines, channels, the current state of the market, kind of what's been going on. If not, we'll let Hostile take over.
I have a question.
What's up, Trip?
Like regarding the current state of the market, like do you have any plans in place? Like, what happens if it pulls back tomorrow? What happens if it keeps going tomorrow?
Sure. I mean, it's essentially why we buy shares, or essentially why that's my current trading strategy. Give me 1 second, guys, actually. Sorry about that. But yeah, Trip, I mean, you know this better than most of us. It's exactly why we trade shares. We don't have to face theta. We don't have to face expiration dates. If the stock continues to go down, we just hold it. With LL and LI, right? These are current trades that we're in right now. Personally, LI had this hammer right here. That's why I got in. And I think it should have ripped, in my opinion. This trade should rip anytime soon. But the current state of the market is pulling it down and it's not letting it, which is fine. And that's okay. And if we go down to 27 and retest this support, I'll buy more. And that's why we told our team to sit on cash and to not go heavy in their plays and to have extra cash. We warned everyone. Hostile warned people. I warned people. Tilio warned people. I forgot how many of us have been saying that we're going to see some type of correction in the market. Cal was saying buy VXX calls, just get some type of hedge in the market. I see that after this week's last heavy ERs, we will see more blood, and that's okay. We've dealt with it before, right?
Like if 300 people.
Like we dealt with it before. Like I remember Hostile and I back in September. Like and I'm just gonna use the LI example because it did the same thing. Like we bag held probably a good 5 to 7 plays because we over leveraged our accounts, and I promised myself not to do that again. And that's why we were holding our cash this time. We were being patient, but we bag held pretty much like all of late September, all of October to finally get paid out fat in November. And it's the same thing that's gonna happen. If we have to bag hold all of February, I'm okay with that. I'm willing to do that because I have no risk. And that's the beauty of shares over options at the end of the day. Yeah, sure, with options, you can make a lot more money a lot faster and you can use less of it, but you have a lot more risk. And I think people need to understand that. I'm not hating on options. Doesn't mean I don't think you can make money. There's still times where I play with it. Personally, I suck at them. But in this case, I need you guys to understand that there's a lot of safety in shares, especially in times like these. But yeah, I hope that answers your question.
Yeah, thanks.
Hey, I got a question for you, Mario.
Sure, phase.
One second, but out of curiosity, do you just have a list of stocks that you're looking at for your plays, or are you using some kind of screener, or are you looking at a specific index for your plays?
No.
And the reason why I ask is I play a lot of the Russell 2K plays. A lot of mine are small cap stocks that right now, even with SPY getting wrecked as big as it is, my plays aren't, my stocks are not as red because small caps typically don't take as big of a hit. Doesn't mean that they won't, but I'm just curious, what are you looking, are there a specific list of tickers that you're using? I know LL was just a fluke based off of Dave's mistakes. But outside of that, are you, is there a specific sector that you look for? I'm just curious, just to broaden
No.
my horizons here.
I'll be honest, bro, and I talk with Austin a lot. I talk with a lot of guys about this. They always ask me how I find my stocks, how I find my plays. To be completely blunt and honest with every single person on this call and on this lecture, a lot of the stocks I find are in this Discord and through like Hostels Q&A, through your Q&As. Whenever I just have such a crazy ambition when it comes to this stuff that if I see any ticker float inside of this Discord, I chart it. I look it up. I figure out what they do. Because that's how you find LL. That's how you find LMPX. That's how you find these random stocks that pay me a lot of money. I don't use screeners. Big C was actually asked on Hostels Q&A like 3 months ago. And Hostel charted it out for them. And I just kept it in my watch list for that long. Unfortunately, I never got into that play, but it's there now. And that's with a lot of these guys. A lot of these guys are just stocks that I've seen, heard of, someone's asked me about, and doesn't mean I necessarily play it. Like WW and CBay, one of my students, he's the one that gave me this stock, and it's coming out of a downtrend, and he played it and he caught it right here, and he caught this little jump. He also caught WW on this play right here, and he caught it up here from the 30 to 31, right? Following the trend line, broke the trend line. That's fine, but I don't have a screen. I know Hostel has the screening. I'm sure he can answer that one for you later, but no, dude, like I can't lie to you and be like, I do have something or a set target. I just try to be as broad as possible because you never know where you can make money.
Right. And like I said, I'm not asking because, for me, there's a very small list of stocks that I typically look at. Of course, I have a different criteria I'm looking at for my plays. But I mean, again, I'm just kind of curious. I think it's best when you have about 20 or 25 tickers that you're well versed with, that you know good support, good resistance, that you can get in and get out knowing what to anticipate. But like, for example, I'm in Lumber Liquidators with you.
Yeah, it's gonna pay, bro.
I'm not concerned. I like the chart. I really do. But again, it's never been on my radar before, right? And I actually looked at it for a CSP based off of your play. The IV was absolute crap. So for me, it didn't make sense to do a CSP on it. I'm still playing shares out of it. But that's why I'm kind of curious. I want to broaden my horizons as well. So this was actually a legitimate question for you.
Oh,
not just
okay.
me interrupting.
No, bro, it's all love, man. You know that. Say hi to your daughters for me and your family. But in this case, yeah, like I use every single opportunity I can. Like, what gym do I work out at? Oh, do they have a stock? Or like, oh, I'm drinking Jamba Juice. Like, how's Jamba Juice doing today? Oh, I'm shopping at Home Depot. Like, Home Depot has a really long line. Maybe I should check out their stock, right? Like, I think people overcomplicate things, and I always encourage people to watch a specific set of stocks, right? I do have my main guys that make me a lot of money. LMPX, XL, KR. Like, I called out KR when that shit was down here. Like, I've made so much money off of KR. I've made so much money off of RKT. We made a lot of money on RKT so many times. Like, I've probably profited RKT 5 times. And people still don't want to trade it because it's not Tesla, or because it's not AMD, or because it's not the Starbucks or Peloton or whatever other fancy stock is popular right now. I've made so much money on Go. Like, I call that shit at 37. and I didn't get in because I was getting greedy, and it went all the way up to 46. Like, there's so many beautiful stocks to play, and KR and Go and SFM, or whatever it is, like that's my fucking local grocery stores. Like that's where I buy groceries at, and I trade those stocks. I didn't see that shit in like some blog, or I didn't see it in here. I was just like, what are my top 5 grocery stores in the area? Let me look them up. That's how I found them, and I made a lot of money on them. And it's crazy, right? It's crazy when I'm saying this stuff, but it's like, look it up, guys. Look at the local stores you shop at every single day. If you're going to give them business and you're going to give them money, you might as well make money off of them. That's how I look at it, at least. When I'm flying on these airlines, I'm getting paid. So it doesn't hurt as much when I buy tickets. Look at that. That's how I found all my airlines. I was like, which airlines do I use to travel with? That's how I found that. Then I looked at all the local retail stores. Then I found those. Then I was like, ooh, let me look at the EV market. Who's in that? Then that's how I found those. Oh,
So you're
what
saying you
bank?
can make money off Dick?
Pardon me?
Like Dick's Sporting Goods, you can make money off of those too?
Why not? Do they have a ticker?
I'm not really sure.
Sure, let's see it. Let's prove it. Dick's Sporting Good. Boom, right here.
Wow, they got a big rise right there.
Exactly. Imagine if you caught this earlier. If you shop at Dick's all the time, why not? Right? Like, what's your favorite store? Where do you shop at all the time? Ladies, Sephora. What's that other big makeup brand that like everyone
Ulta.
goes to? Ulta.
Ulta.
Like, there's that, right? Like, does Victoria's Secret have a fucking stock? Like, I don't know, but let's find out, right? Like, there's just so many plays, and I think what happens is that we want to overcomplicate stocks, and it doesn't have to be as complicated as we think it is. And that's what I try to do with these lectures. I try to make it as simple as possible. And I don't have to preach to you, right, FaZe? Like, you know all of this stuff, but I hopefully anyone else hearing this can learn is don't overcomplicate it, guys. Keep this as simple as you can. Like, just keep it simple.
Yeah, right. I mean, for what you're saying is absolutely true. I mean, I completely 100% agree. I just didn't know if you were using a specific list, and you know, LL, for example. I mean, that's something that never would have came across my radar. And you know, I'm reaching out to Hostile about a screener would be a great idea. I just like playing the same tickers over and over. I mean, I'm a TNA type of guy. I was telling Hostile the other day, why play stocks when you can play an index and get paid on it? I may stop playing stocks altogether and just play TNA as a Russell 2K index, knowing that the Russell 2K always runs in a bull market.
Yeah, if you know it that well, then yeah.
So I mean that, you know, everybody has their own potential and the way they look at things. So I just figured I would ask.
No, it's a super valid question. When RKT drops again and it gets back into the 20s, what am I going to do?
Take a look on Tuesday. I think they have their lockup period on Tuesday. RKT. So I think there's a potential for it to. I think it IPO'd at 17 or 16 in that range. It's at 23 right now. So I wouldn't be surprised for it to revisit 20 or so.
Yeah.
On Tuesday. So that may be a good entry point.
I've made money on this so many times. Once, twice, 3 times, like 4. Like, it's ridiculous. It's ridiculous how much money you can make on a $20 stock. And I follow this to a T. I follow LMPX to a T. I've made money on this once, twice, 3 times, 4 times. We got in here, and sure, we're in a little bit of a downtrend, and we might have to average down right here, right? But I'm gonna make money on it again.
So right now would be a good time to get in.
I'm not gonna advocate getting in plays because we are in a bearish market, whether people want to face it or not. Like, that's just the reality of it. The market can't go up forever. That's just how it is. You can make money in both, in whatever market it is. You'll always be able to make money. The
Mario,
issue.
I'm gonna interrupt. I'm sorry.
Go for it.
You mentioned this twice, at least that I heard. I don't want to call this a bear market yet. Bear market is 20% correction. And I want to be very clear when I say that, because when we say bear market, that means that we're going to be in a continuous downtrend. I don't anticipate this being a bear market with the Fed pumping and quantitative easing, and hostile, feel free to chip in here as well.
Coming.
I personally do not think that this is a bear market. I do think we will see a correction. Correction is defined as 10% drop in your indices. A 10% drop from what I anticipate is somewhere around 355 to 365 on the SPY. So I just want to make that very clear. Yes, sit on cash. Wait for us to start creating a solid uptrend before really getting into plays, unless you're holding something for long term. But other than that, let's not call this a bear market, because I think that scares people more than anything else. Yes, it is a pullback. Yes, it is a healthy pullback. Yes, it is something that the market needs, but I don't want to call this a bear market just yet.
Yeah, what Face said, guys.
I
Whatever
think
Face says,
the
it's
best
facts.
way to describe it is bearish time frame, right? So
There you go.
There you go. I think that's what I meant.
Every set of months has bullish, bearish, or neutral time frames. And
I have a quick question. Oh, sorry.
And what you got to recognize is the market is cyclical, so it's always going to make these pullbacks, jumps, and go sideways. So when you start recognizing historically, and you're watching the markets, you've been in it for 5 years, and you know what months generally are up and what months are generally down and which ones are sideways. That's going to benefit you based on how you trade and when you should be getting into positions and going into cash.
Yeah, so I see the markets bleeding a little bit more. We'll just say that to make it a little bit fair for everybody. I don't know what LMPX is going to do. It genuinely holds that 23 really well. It finally broke and it hit this 22. Shoot, man, if it goes down to 20, we just buy more. Like, regardless, we're going to make money. It's eventually going to go back up. This still has an ER all the way in March. I don't know when the market's going to come back, but at the end of the day, as long as you hold your shares, they will eventually come back. And Hostel and I have done that so many times together. That's why I'm not worried. And I'm kind of excited for this Discord, for the new members to go through their first bloody month. Because if you can make it out, like I promise you, if you can make it out and you can deal with the emotional roller coaster of seeing every single day of the month red, you will be a really, really good trader coming out of that. It just humbles you. It puts things into perspective that not everything is going to be green. The next time you're in red, you're like, damn, I've been through worse. This is okay. I think that's why I kind of got used to red.
It's honestly not even realistic to think that the market's just going to keep going up. It's just unrealistic to think that. It's unrealistic to think that GME is going to keep pumping. It's unrealistic to think Tesla's going to keep pumping. It's unrealistic for any of these stocks to keep going up. Yeah, I mean, Tesla is a great example of things that are equities that continue going. But at some point, it's going to hit a high, and then it's going to retrace, and it's going to come down. And Tesla always comes down pretty hard, but it always jumps right back up. So watching the same stocks over and over is going to help you as well to understand how a stock reacts based off of pullbacks and jumps and all that kind of stuff.
Which is a crazy thing, right? Because LMPX was positive all of September, October, which is ridiculous because we were red. I remember also you and I were pretty red on most of those because we were trading banks at the time, I think.
Yeah, I think I had some Citi and Bank of America, and you had JPM or
something. But we bought what was it? Was it BAC? No, WFC. We caught like at 2022, and we rode that. Yeah, we made a lot of money off of those plays, guys. So be patient. There's going to be a lot of plays presenting themselves in this next coming month. So I just really encourage you all to be patient. Find those really strong supports. Go and chart your charts. Find those 10, tickers that you really like to watch. Find the bottoms, chart those out, and to see if the stock has any potential to go down there, and set your limit orders for those positions. Because I still think that we're going to get some type of pullback.
I have a quick question.
Go for it.
So I know how you have your charts and you mark support and resistance. Is there any sort of charting platform that will give you notifications when it hits those marks?
Yeah, I think most
Yeah,
standard.
TOS, alarms
Yeah,
and everything.
I think like every
TradingView, TOS.
broker will give you some type of alert. I think I can do it here. I normally don't do it just because I know right here it says alert. Click alert. What does it want me to alert at? Right? What price? And you set the price.
You can right click too and do it, so you don't have to type shit in.
Oh, perfect. Right? And it would alert it, the message, whatever exactly you get. Every broker has their kind of own system. In this case, yeah, look, alert right here, right click. You can do it on your phone. You can do it on the desktop. Get used to that, or get really good at setting your limit orders. Now that I work during the day and I work during I trade, like while I'm trading, I'm working at the same time. I've been getting very good at kind of setting my limit orders. And if I would have set limit orders, I think I would be making more money. If that makes sense. I would have gotten into Go. I would have gotten into Apple. I would have gotten into Blink. I would have gotten into SPE. I would have gotten into all of these plays if I would have just set my limit orders.
I have a question also. Does it matter what time frame I'm charting on? I can just chart on any time frame.
Who is this, by the way?
This Danny.
Danny. Sorry, I'm just a big fan of like kind of meeting you guys and getting to know you guys. Yes, time frames do matter. I talked this in my previous lectures. The more time you have, the more information is there to work with. So the stronger the support is. In this case, I chart because I'm a swing trader. I swing on the daily. I use the daily. It has the most information. Simply use longer dates. Telio likes to scalp on the 15. He likes to scalp on the 30. He likes to scalp on the 5, on the 2 hour. I think Zoro is a fan of the 2 hour chart as well. Fidget likes the 15th. Dude, sometimes Fidget goes like on the 1 minute and he's made a lot of money like scalping these really, really short trades on the 1 minute. Not that I recommend it. Dude knows a lot about his scalping stuff. But figure out what works for you. Just understand that the longer time frame you have, the more information is there. And like you can still use those support lines. So if we, in this case with LMPX, let's change it to the 2 hour. Look, that support that I drew on the daily is still respected for the most part. Yeah, you have these outliers, but for the most part, it still respected it. Even on the other ends, you can go to whatever time frame you want. It still respects it. Right? Let's go shorter. I normally don't even look at these time frames. Look. They're respecting all of it. Can you use these time frames to scalp? I would say fuck yeah, you can. Look at this. Like right here. If you would have caught the support that I drew on the daily, and I don't know how you guys scalp. Like I that just doesn't interest me. But like you can go from what percent? What is that? 23 to 24 in a matter of minutes. Like 1, 2, and then it just broke and it went all the way up to 27 in that specific moment. So it's like, yeah, it's very doable.
Thanks, appreciate it.
Yep.
Just remember when you're doing charting, the closer you in are, the closer time frame that you have, like a 10-day or 5-day or whatever, like Mario was saying, you can't see the history. And if you can't see the history, you don't know where the support or resistance is at. So when you go further out, like a 6 month to a 1 year time frame, you're able to see all of the data that you need to see. Right, the stock travels within a certain area of price, and it's not going to do that in 30 days. It's not going to do it in 60. Right, it might do it in 6 months, but it's almost guaranteed to travel its entire range in 1 year. Right, so it's best to go out farther so you can understand where are the strong points, right? The way I always explain it is shorter time frames are weak and weak support, weak resistance. When you go much further out, they become stronger, much stronger. So it's very important to understand the difference between weak and strong support, because we could see support levels in a downtrend, and you might think that it's a strong level, but then you zoom further out and you're noticing that the wave that it's in is a downtrend, and it's going to beat that one. It's going to crush through it, right? So you want to try and find things that are reversal supports and reversal resistance.
Okay.
And I think that's the most important thing to understand.
I understand.
Cool. Hope that helps.
Yo, Mario.
What's up? I recognize this voice.
My name's
Cool.
Cole.
Let me mute this person.
I got him. I was trying to
You got
find
him?
him. Yeah.
Okay.
This isn't a question. Just wondering if you could upload the PowerPoint you were going over earlier, just for future reference.
Yeah, I definitely think I can. I'll have to talk to VCAV or Hostel because I think they're kind of in charge of like the education portion. Those not the charts per se, but literally the candles that I pulled up is in our education section. I did it on purpose so that you guys can just go back if you have any questions.
Okay.
If you,
They're all
if you go
there.
to the candlestick patterns section or channel under education section, all of those candle pictures and explanations are given by Tilio.
Yeah, I literally took it on purpose from there so that you guys have a reason to go back in there and look into it. Everything I do is plotted out for a reason. The reason why I give you guys homework, the reason why I lecture the certain way I lecture, it's to get you guys to learn. Like, I need you guys to learn. I always joke around about this, right? But like, if this Discord were to explode tomorrow, how many of you could realistically trade on your own? 5%? Maybe? Like, like if we're trying to be honest with ourselves, no bullshit aside. And sure, some of you guys signed up for this just to get alerts, and that's okay, and I'm okay with that. But a lot of you guys are here to learn, and I want to see it. But you guys will only get there if you put your effort into it. I can't hold your hand for all of it. You guys need to watch these lectures and learn. Learn the basics, then you learn the more intermediate stuff, and then you learn the advanced stuff, and then you become a really, really good trader. I was in your shoes. Remember, I was in this Q&A listening to Hostel while I was at work 6 months ago. You can do it too. I never thought I'd be giving lectures, and look where we're at. Now I have a team.
Money. He was losing money, guys.
I have a team now of people that know how to trade on their own, and I feel comfortable with them. To a point where sometimes like I look at their plays and I'm very proud of what they give me and they show me. This is why I give you homework. This is why I take the time for you guys to like literally do it. The first time I signed homework, a bunch of you did it. The second time I homework, like less and less. And I'm like, I was just curious, like what's stopping you guys from charting? Like, are you afraid of being wrong? Are you afraid of being critiqued? Like, that's the only way you guys are going to learn. I can chart out shit for you. People keep asking me, chart this, chart that. At the end of the day, what are you going to learn from that? And this is no offense to anyone, but it's like charting out something for someone else doesn't help you.
It helps
what I
you.
like, yeah, it helps me find new tickers. Like, thank you. But I want you guys to do this on your own. I will always be more than happy. Like, people are like, can you check out SLV? The first thing I will say is, send me the chart. I'll look at the chart for you, but you have to send it to me. And I'm not trying to be mean or rude or anything. I'm not trying to sound better than anyone else. I just want you guys to learn. Because when you learn, things you can change your life. This opportunity, guys, we have been granted an opportunity to be able to trade in this current market. And you can change your life for the better, forever. You can set up your kids, you can set up your own life, you can change your life. Take advantage of it.
you can
Anyways.
change it so wildly that you'll be flying private jets.
Yeah, before I go on a tangent, guys, any other questions? Sorry.
Hey Mario, it's Dennis or DC.
Hey, what's up, brother? Good to see you again.
Good to see you guys. Is FaZe still in this chat?
Yeah, FaZe is in here. I'll let him take over. Actually, I think he's not in here, but I can. If I can't answer it,
Okay,
Hostile will be able to answer it.
Hostile, you're here, right?
Of course.
Hostile. Okay, so FaZe likes to play TNA a lot, and I've been watching it, and I know it's the tracks, the Russell 2000. It's a 3 times ETF. So my question is, with the volatility coming back now with markets, that seems a little riskier now, because I know it's been trending up a lot. So it's kind of, he says it's an easy trade, but that trade is not getting easier now. So do we have concerns? Should we be concerned about that in the future?
So that is a concern that I've been throwing at him almost daily. I keep telling him, watch out, because that's going to come
Because
down hard.
that can rip hard in either direction.
So what I think the safest way to play this, and I just personally recently discovered this myself, the best way to play TNA on the way down, right? And it's a bull ETF, mind you. You get in on a Friday at the end of the day when it's hit a low number, the lowest number of the day if possible. And then by Monday, so you're doing weeklies, right? And by Monday, that theta is going to decay at least $50 to $60 off that position. And if you get just a little bit of green, come market open Monday, you get out of it. And repeat that process all the way down. You could play it downward, but you've got to be fast. You've got to be quick. You've got to be attentive on that position. It's not something you can let sit. You know, if you are interested in playing something, so I jumped into the one with FaZe. I think it was 65p. Yeah, I think it was a 65p. I got like $230 for it. And it's got a. Let me see. Let me check before I lie. Hold on a second.
Just because I've been watching that a lot, and if we unload a put, or we're bullish on it, and that thing goes against you, like, you're gonna have to margin up quick.
Well, here's the thing: is you can easily roll that out, right? And if it's going heavily against you today, and you've got 2 or 3 days before you need to do a roll, you know you're gonna want to wait until it does one big pump before it falls again. And when it does that pump, that's when you roll it, right? And you're going to roll your strikes downward too. So you're going to roll them strikes down with the stock price. You're going to try and chase that stock price downward, right?
No, I'm okay. As like, I'm just saying, with the volatility back, you already warned him. I was just concerned about future TNA calls that he's saying easy money. I'm like, I don't know how easy it's going to get now. So
it's definitely going to change, in my opinion. Definitely going to change. So here's an example. So the 65p is a 32 theta. So that's $64 over the weekend that goes into your pocket, assuming Monday goes green just enough, long enough for you to get out of it.
To get out, yeah.
Right. And if it does go green, you're going to see another probably $30. So you might see a $90 return on that position. You know, if you've got 230 or whatever it was paying. Let's see. I need to go on my other account to see what I got paid, but I think it was 230 what it gave me. So you know that's the strategy with TNA when it's going down.
Yeah.
When it's going up,
but
you let theta take control. But here's another thing.
Just on the flip side, though, right? If you let it hold through the weekend and you have downside news and you're basically open up to a red day, like, that's not good, right? So
well, it's not. But here's what I was getting ready to show. Mario, you mind if I take over the screen?
Always, brother.
All right.
Give me 1 second.
All right. Let me share mine. Just 1 second. All right. Should be able to see it now. So with TNA, we've got a support area that is pretty strong and will hold all the way till expiration, in my opinion. Which honestly is next Friday. And it's going to be this level right here, 65 right there. All right, so if it doesn't hold this area, 65, it's definitely going to hold a couple of dollars below it. Right, so the market doesn't just tank. It's not COVID all over again. It'll tank, it'll do some green, go sideways, drop some more, create new lows, jump back up, do some sideways, break a new low, that kind of thing, right? It's kind of like what it's doing right here daily, right? So if you look at the daily movement here on TNA, first let me draw this. So 65 is right here roughly. And then it's got another level. It's pretty solid there. So if we look at, so you see here, it now this is expected with a bull ETF, right? So it opens up, falls, and then jumps back up. Like so, for example, if you're in a position you've got to roll, this is when you do it, all right? Or if it opens up and it's green and it's a Monday, you get out, and then it pumps up and then falls, whatever. But you see here, it kind of goes sideways for 2 days, and on the third day it breaks that new low. So what I'm expecting come Monday, we might see it go sideways, we might see it drop a little bit, and then go sideways and jump back up and try to retest maybe like this $80 area and then fall again, right? So those are the days you're going to want to get out. And it does those testing. So the object here is you get in when it drops hard, when it has a nice big hard drop, you get in, right? And you want to do it on a Friday, never in a bearish time frame, never ever do it on anything but a Friday if you're doing TNA weeklies. Because that's very important, because you're basically utilizing theta. Theta is going to give you $60 just over the weekend, right? And then Monday opens up, if you get just a little bit of green, you've got profit. Time to get out. Yeah. So it's a quick weekly scalp. You can make anywhere from $50 to $120 every single time. So just keep that in mind when you're doing it. And we're doing it off of the support levels, right? I mean, we're doing it off of this support level. I mean, it's a little high. I would like to do it at the 61, 62, but it's not enough premium, right? The 62 is showing $100. That's really not that great, right? So the 65, and I'm looking at open interest as well, right? So the 64 is pretty decent. I liked it, but at the time, it was only showing, or actually, no, I'm sorry. Look at the open interest here. I was looking at extrinsic value. I'm retarded, sorry. So this is why we chose the 65, 361 OI. Everything else around it is trash, right? I wanted the 63, 64, or even 62 if I could, 62 and a half. Just the OI is just not there, right? But once I get out of this position and it falls, and comes back, comes closer to down here, then I'll be looking at the 60. All right, so the 60 is right here. All right, 60 is really good. I like the 60 a lot. And it looks like other people do as well, 800. So that's even better. And the 55 is pretty solid. All right, so that's kind of how you look at this, is multiple checklists and things that put you in a position where if it does go down, it's really not the end of the world. You can roll for a credit. I mean, I'm in a position right now that I keep getting crushed on, but it's totally fine because I've rolled it twice now, and I'm up to almost $800 in premium. So if I keep rolling, and then finally it does what it needs to do, and it goes and it jumps hard, then I'm going to be in the position where I'm at 90% return off of $700 or $800. All right, and this is the one, Nug T, and I alerted this 3 weeks ago. As soon as I alerted, so it filled this gap, and that's what I was looking for. That's going to be the thing that I discuss here shortly is gaps. People need to understand what gaps are and how to utilize them in your favor. But this one right here, it created a big gap. It jumped up. All right, so I was like, all right, I know this thing's going to fill this gap pretty quick because this is a ETF for gold and silver. So those move pretty quick. It's a 2 times ETF. So it made its high, gapped, and then dropped hard, right? And when it filled that gap, I got in at 71. 71 is where I got 71.50 actually. And I was kind of aiming for this resistance level based off of open interest, and it kept going down, right? So by the next week, I had to roll out to the 71 from the 70, or to the 71 from the 71 and a half, and I took in like a $55 credit. And then this next time, it just kept falling, right? And so I'm not sitting here like, oh no, I'm losing. I'm gonna have to take assignment. Getting emotional. No, I'm just like, whatever, no big deal. You know why? Because I will go further out in time to where I can roll down this contract another strike and take in a premium for it, right? And that was my goal here, is to take, as long as I'm taking in premium, and as long as I can roll down that contract strike and get as close to the next expiration as possible, it's a win-win, because at some point it's going to jump. It's going to make its money. Guys, if you're not muted, I'm going to mute you. So please mute yourselves.
Okay, so Hostile, now that we're on precious metals here, I joined a little late. Can I get your take on, I know you're long silver, but on this recent weekend, silver squeeze chat online that's happening right now, and it seems that, things are moving right now on silver. Can I get your take on it?
Well, silver and gold generally move together. Silver actually, holy shit.
Right.
I didn't see that.
Yeah, opened up to like 29, and that whole silver
that
squeeze
was
chat is seems like something's happening, because it's a lot higher than gold. The gap up.
that is
Can I add in about silver?
huge.
That's big,
It's
right?
also one of the means. It's starting to become one of the meme stocks. They're actually been looking at it, so it's probably going up as well with that.
Yeah, see, SLV is one of those that's been manipulated by hedge funds for decades. Or as soon the first time it ever came out, it turned into a manipulation stock. I think the Wall Street Bets group is going to try and pump this next. I think that was the story, right? So one thing that does make me nervous is huge gap. That is a monstrous gap right there. And this was after hours on Friday. Right, so we'll see what happens.
Well, that just opened up at 7 p.m. today, so that's the gap up from the weekend.
Is it? Okay, let me take a look. Okay, gotcha.
Yeah.
I mean, so hey, let me take a look at another time frame here. So for those of you that were asking, this is a perfect example. For those of you that were asking how to look at support levels and what time frames to look at, here's a perfect reason. I go to the 1 day, 1 minute and look at the pre-market, after hours, or whatever, right? And I can see, all right, it did a huge gap and there's nothing to the left. So I'm going to start going out. 5 days, nothing. Okay, I'm going to go to the 10, nothing. Go to the 20, again, there's nothing. But this resistance level was broken with super strength, 25 and some change, right? So this is what we're starting to look for, is where are the resistance levels, and it looks like it broke it pretty heavily, right? So that right there is one indicator that this is a bullish thing, because it broke resistance. All right, so now I need to go further out and say, all right, let's 30, so nothing at the 30, 60, nothing there as well, 90, again, nothing in this area. So what we're looking for is resistance. The 180 is going to have it. So then we come all the way over here and look, see, all right, it broke through 2677. That's pretty awesome. The last highest known resistance point is at 2786. All right, so we are still above that, I think. 2786. No, we're below it by, it's at 2745 or something like that. So that's a resistance point, and it's struggling to stay above it, right? So what we need to understand here is what's silver going to do if it gets back above this with strength? If it tries to retest this 29 again and it pumps back up above it, we should still see gold and silver run super heavy, right? Because there's nothing for the next 10 years. There's nothing, right? 1 year. Well, I take that back. No, I'm sorry. This is the 180 time frame. Yeah. So right now it's at 27.44. So it actually, this is a little misleading because if I go back to the 180, you know, you can see here it's 27.80, not 27.43. Let me just go back to that, make sure. Yeah, see, I'm not sure why it's saying 27.39. It's 27.80. Anyhow, there's nothing. All right, so go back further. Go back until you find what you're looking for. All right. If you can't find it, then then it is what it is. But I know it exists because I've messed with it before. So here's where we're at. This is as far back as we need to go for now for silver to find the resistance levels we're looking for. Right. So if we're able to break through and stay above 27, which we've broken through it, but staying above it's the key here, it's gonna maintain its strength. And then the next levels are going to be, 31, 32, and 34 roughly, right? And those should be easy to break through because remember what I said with strong and weak support or strong and weak resistance. This is resistance on a downtrend. That's weak, right? And honestly, resistance and support in any part of the wave whatsoever is weak. Once it becomes a reversal, a trend reversal, then that makes it strong, right? So, example, this $10.86 part right here where COVID happened, that's a monster reversal, and you'll probably never see it that low. But if it ever did get down here, that would be somewhere I'd be throwing every dollar I got at it, basically, assuming there's nothing else out there that's just as good. This one right here is also another example of a reversal, right? That's a reversal support, even though it's still somewhat short term because it's a couple of months. I think it's still a strong reversal point. As you can see, it did it right there, right? And again, strong resistance levels, right? These red candles and green candles right here in this wave going down, those aren't strong, but the first one is because it did a reversal of trend. Okay, remember, trend reversal support and resistance is the strongest that you can find. You can't find it any stronger unless there's multiple points of support or resistance on the same line, but generally they coincide with a trend reversal point. Okay, so I'm going to share a list that I put together just recently of some tickers that I'm kind of keeping my eyes on, and this is a decent sized list. And the reason why I'm looking at them, I will show you why I'm looking at them. And actually, it's this watch list that I've got right here. The purpose of me watching them is because there's major gaps that need to be filled. Right. And I'm just going to share this real quick in my channel so y'all can follow along, with that information in front of you versus what's on the screen. Kind of help understand what I'm looking at. So let me just do that real quick. All right, so I'll put it in my channel there. I put the levels that I'm paying attention to, or the price targets. These are potentially really amazing entries depending upon the time of the market, meaning is the market bearish, is the market bullish, whatever the case. All right, so I'm going to jump right into AMD. And I'm going to show you exactly what I'm looking at. So with AMD, $67 price target. That's right about here. right? So let me go closer in. I think I was looking at 180. Oh, maybe not. This right here, let me get my square. That gap right there has not been filled. And this happened during the Intel bad news Intel stuff, right? And frankly, I could probably add in this gap because it's empty, right? It needs to be filled. This is a much smaller one, and I think if we get down to the $67 price target, we're going to get down to this 61 or so. Now, there's a lot of people out there that are saying, no, I don't think that's going to happen. There's no way that AMD is going to do that. All it takes is for Intel to come out and say, we have a new chip. It's just the same price as AMD's. It competes exactly the same, and our earnings are up. That's all it takes. And then watch the money change from AMD to Intel. That's all it takes. And then watch AMD come back down here to the $61 level, where it was trading at prior to the Intel news. All right, so in my opinion, not a far thing, not so far-fetched. All right, so BA 158. I got too many lines here. Hold on. All right, so this gap right here, 158, right on the dot, almost. As close as I could get it, at least. BA is going to fill that. It's honestly on its way down to do so. Right. It's not going to probably drop too much lower than that. I don't think it will. I think we'll see it maybe get to 156. The reason I'm paying attention to this, and it's not because I'm interested in short-term calls, I'm interested in leaps. This list of mine is specific to leaps and leaps only. Right. If I get into this position at, say, I'm just going to do a little bit of estimation here, 158, and maybe pick somewhere like in the middle of that range. So let's say the price hits 158, the top is 244, you know, in between's like 180-ish, right? 190, 200 maybe. So if I look at that and say, let's just look from where we're at, 665 to 158. So let's say 160 because that's going to be at the money. So $600. If the price falls all the way down there, it's going to cost me this much, $500 to $600, 700 at most, at 158, right? But then what if it jumps back up to 200 or 180? Let's just say 180 first, and I pay $600 for it, right? The price difference is over 1,000 in gains. And the reason why I like leaps is because no matter what, if you get it at support and you buy yourself 12 months of time, you will see profits, almost guaranteed. Now, I'm not going to say 100% guaranteed because there's always a chance the market just gets crushed and then we're in a bear market. And I mean, there's just always a chance of another black swan, right? So keep that in mind, but leaps, I think, have an extremely high probability of winning, right? And that's why I'm looking at these. And, you know, we're looking at $1,000 a position here, with 500 to 2,000 in each one of them, right? So Bank of America, look at this gap right here. I mean, this is a huge one, huge gap. And it's coming down. It might not feel it, but I think it might. I mean, this isn't out of the ordinary. I mean, price is at 29 right now. I'm talking about filling a gap to 25. Not that hard. It was just at 34, you know.
But aren't gaps usually filled?
I don't know what you just said. You sound like a robot.
He said, does gas gap always filled?
Gaps always fill. Always. Now, when do they fill? That's the question. Right? So I'm not necessarily saying, oh, I'm waiting for this to fill to get in. I'm saying I'm just going to watch that stock until it hits that price. If it even ever hits that price. If it doesn't, and it just continues to go up for the next year or two, I mean, so be it, right? Gaps do get filled though. Always. It might take 3 or 4 years. I've seen some stuff I looked at for people 10-year time frame. There's a gap there 7 years ago, and it filled it this year. Always fills. You just don't really know on the time frame. The further away from the current price, like a huge drop, like let's say AMD has a gap down at $45. Probably not going to see that one for a long time, right? But if it's within 10% drop of the stock or 15, I think it's pretty likely you'll see it, right? I mean, let's look. What's the percent difference from 29 to 25? Let's see, 25 divided by 29. 8.6% difference, or I'm sorry, 11.4% difference, right? 11.4% drop is all that needs to hit to fill that gap. Y'all tell me if you think that's a possibility or not. It already dropped 2% Friday. Another 4 or 5 more days like that, you're right down there instantly. Citibank. Now this one's far, right? It's super far from its position of the percentage wise is a lot different compared to Bank of America, for example. Right? So if we're looking at the gap here, we're looking at, what's that, 43.5 from 57. Still really not that far. I mean, when you look at the chart and say, oh, I mean, that looks huge. Well, it may be, but the chances of it coming down there in a bearish time frame are pretty high. Yeah, if you ask me. Somebody just asked about gaps. Do they always fill? Yes. Here's an example. Right. Created a gap there and filled it. Created a recent gap here and filled it. Right. The long-term gaps, or the gaps that are further out of the money or further away from the price of the stock, they're not going to fill instantly, but I still think there's likelihood that they do fill. Time frame is just the one thing that's really tough to understand. Let's see, CRSR had to fill at 35, I think it was. Where did I see that? Not sure where I saw that gap. Anyhow, I still like CRSR at that price. It's pretty awesome. See, Expedia has a nice one. Let me clear all this stuff. I'm going to go through this, every one of these, so I can drill it into your minds so you can understand that gaps are very important to understand. And I always use the bodies, not the candles. Or I'm sorry, the wicks. Bodies, not the wicks. I mean, look at that gap, and we're near the top of it, right? I mean, if I can get this down to 103, 104, and I jump into a leap, I mean, think about it. I'm gonna use the same analysis that I did before. Right? This is more pricey though, but so if the price comes down to 103, right? If I can get in at the money at 103, and then it jumps just back to this support level that's acting as resistance at 120. So 103 to 120. All right, we're going to kind of generalize here. So right here. So let's say $2,800 what you pay at 103, and then it jumps to 120. So we're looking at $500 to $700 in return off of a leap. I mean, that's fantastic. It costs more money to own a leap. I mean, look, $2,700, right? But there's a reason why it costs more, because it's less risky and it's highly probable that it goes in the money. Highly probable. I mean, look at the delta on this. 60%. That's a 60% chance that this stock goes in the money. Imagine if you bought that as support. 60% chance. And when I talk about delta and 60% chance, that's a short time frame. I'm not talking about 3 or 6 months out. I'm not talking about having this stock swing, do its pump and swing back up in that higher territory. Because at that point, this 60% number is way higher, right? And when something swings back up, now let's remember, the stock market in general is uptrending forever. You hear that saying, stocks only go up. In the long term, very long term, absolutely, that is a true statement. There will be pullbacks, but I mean, if I show you pullbacks on the SPY due to COVID and the recession and all this other stuff, from the time the SPY had hit the market until now, it's been in an uptrend. Yeah, we had some major reversals at times, but it never went below the bottom, right? So they always go up long term. This is why I've been pushing leaps really hard, because it's like buying shares. So here's an example, and this is why I'm interested in leaps instead of shares now. And I only recommend people do this when you have substantial amounts of cash to do it with. Right, so here's the example that I'm going to use is Apple. Made $1,100 on Apple last week before earnings. The day before earnings, I got out, and then Apple started falling. Right, I put in $1,800 in that position, made $1,100. Had I bought 100 shares of Apple, it would have cost me $12,600 to get 100 shares, and I would have made off of 100 shares and that same amount of movement, $1,500. All right, if I bought $12,600 worth of options, I would have made $7,000. Right, so I'm not telling everybody to go out there, instead of just buying shares, go buy options. No, that's not what I'm saying. There's reasons why you buy options on certain stocks, and there's reasons why you get shares. Right, especially as a new trader, or you're still developing a strategy or whatever the case. Don't rush into buying leaps. Right, do buy shares. That you can't be any safer. Right, I'm just saying that once you get in a position where you understand what you're doing, you're confident with what you've learned and how to chart things out and what to see and when to get in and know how to choose the right strikes and all that stuff, then you start looking at leaps. Right, because leaps are going to pay more money than shares will. Right, but again, shares are the safest thing to do, and I recommend everybody do those instead. All right, so moving to the next one, Halliburton. This one's got multiple gaps, right? So we got small gap right here, and then you got a gap, pretty substantial gap right here. All right, I mean, we're talking down to 1250. I think that happens. I think it comes down. I mean, it's already having pretty hard drops. There's really no support anywhere. I mean, you get this resistance level that can act as support, and it may, but I don't think it's that strong to keep that stock from falling further. All right, IBM. IBM has a gap up that it needs to fill. All right, this one right here. This is beautiful. Who's that?
I have a question.
Okay.
So back to what you said about support or resistance turning to support. How do we know that it will act as a strong support once the resistance is broken?
It's kind of hard to hear you. I mean, I kind of get what you're
He
saying.
asked, he
but
asked how do you know if it's a strong support or if it's a strong resistance, and what happens if it gets broken? I think that's what he asked.
so I just went over recently why or what I think strong support and resistance is, and that's a trend reversal. Simply, when something reverses a trend, is strong support or resistance. Here's an example. That right there. You see that? Wave down, reversed it. That's strong support. Right? That's what you need to be looking for. This resistance point is a trend up, reversed it. Right? So when stock price is going upwards to this point, expect a lot of resistance because it did a reversal on a previous wave. All right, I'm gonna go through another one. JNPR. Oh, shit.
Can you hear me better now?
Sounds like it.
All right. So sorry, I just want to rephrase my question. My question was when a resistance is broken strongly and the stock comes back, how do we know that that will be a strong support? That's what my question was.
Oh, you don't know. Honestly, you don't know what's going to be strong support or resistance. What you do know is when the volume, let's say it breaks through a strong resistance point. It goes through it with strength,
Right.
stays up there, creates new highs, and then hits another resistance point and starts falling. All right. So what you got to understand is when it comes back down to that resistance point, that can act as support. It doesn't always,
Right.
but it can act as support. Then you start looking at the volume at that level. So when it hits that price, what's volume doing? What's volume telling you?
Should Yeah, I mean, if it goes down, then I guess it's going to be a strong support. It could be potentially.
I mean, if that resistance point, if the stock is falling, hits a resistance point, and then bounces off of it, and you've got a change in volume going from green or red to green, that's an indicator of saying this is strong support.
Gotcha. Okay. Thank you.
Okay. Let's see. JNPR 20.5 is the point that I'm looking at. And this thing had two huge drops here on the day candles. Super huge. So I expect this to come back down. I mean, JNPR loves being around 21, 22 areas. So this gap does need to be filled. And I think we'll see it happen with that. JPM, gap's actually right around 105. We're at 128. It's literally right in the middle of 142, 128, 105. Chances of it happening, I think, are pretty strong because you've got multiple resistance points here that are acting as support, that could act as support. I mean, they're not always going to, but there's a high chance that they do because there's multiple things that line up here. Right. So when I draw out this line, all right. So you got your gap here, right? You've got resistance, 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 resistance. All right. Once this gap gets filled, I would say this becomes support and it bounces. Right. So it has to fill that gap. Now the question that I have yet to answer for myself is when something fills a gap, how much further does it go? And I think it's dependent upon the specific stock that we're looking at, not necessarily just gap filling in general. And because each stock does its own thing. So it's up to me to determine on these specific stocks. So let's say they're getting close to that gap. I'm looking for how deep into that gap and further beyond it may it go, right? Because it's not an indicator for me that says the filled gap is now support. It doesn't work that way either, right? So what you got to understand is what's going to make this bounce after it fills the gap, right? Or so laser. I think we get a gap filled down here at just under 18, right? Same concept. You know, this is all wicks. You know, I've got this gap touching bodies. We need to see bodies get filled. MetLife, we got a gap right here. Under 42 is where it needs to fill. It's at
By the way,
48.
there's a gap to fill on Fastly too.
Okay, I'll check it out. MGM, we've got one to fill at 22. And right now, Vegas, they're not, this is slow season for Vegas. So you see this thing starting to crest? I guarantee you this falls. How quickly it falls, I can't tell you. But what I can tell you is when it fills this gap, I think it might fill that gap by March. It's going to have some slow movement downward. When it fills it, we're going to see it happen, right? Now, this one here at 19, that may or may not fill. It's wicked. So wicks can act as gap fillers, especially on the day chart. So that one's probably a little bit more far-fetched than this one. I think this one we absolutely fill. And then you see the support line that's below it. I mean, I would buy leaps here as soon as it fills. I don't need it to touch this support level. I just need it to fill this gap. Based off of this support line, I would be interested in purchasing leaps. Now, with that being said, I may just wait and watch it, see what happens when it does hit support. So let's say it blows through this gap and touches support here, right? And that bounces off. You know, I could probably get it right at support. But the question is, will it continue to fill down here, right? To 1915 or so. But if it does, again, great, whatever. If I got in at support, I bought a leap on support. That's what we're after. All right, Microsoft. It's got a gap to fill, not a big one, but I think it should not have trouble filling it. 206, 207. It's almost filled. I mean, you could potentially argue that it has, but I mean, if you look at this, nothing has filled that gap. So let me draw a line instead of a box. There, nothing's touched it. Hasn't filled that gap, in my opinion. Let's see, plug. We got multiple gaps on plug. Absolutely going to fill this one here, down to 50, under 54. Absolutely, it's on its way. Does it fill this one? I think it does. It's too huge of a gap to be left open. It has to fill. And again, when it fills that one, I might jump in a leap. RCL's got a nice one to fill. Right here at $60. $5 left. Here it comes. But this is a cruise line, so it makes me a little bit more nervous to do that. However, RCL is one of the better of the cruise lines, so I don't think this will be an issue. I think it fills that gap and then bounces. And this one, when she moves fast. So I expect big gains off of this one. I mean, I've seen implied volatility over 150 for RCL. So if it catches that and jumps up in IV, you're going to see crazy gains on a leap. Ride has a small one to fill right here at under 24. So I think we definitely see that. Absolutely. I don't necessarily care much for Roku gaps because I think it's going to fill it. But who knows? Who knows how we do with Roku, right? Starbucks, we've got one to fill right here at 90 and a half. And it's almost there. It's at 96. I say we fill that and then she pops. Starbucks just keeps going.
I have a question, Pastor.
All right, let me finish these last few, and
Okay.
then I'll start doing questions.
Oh yeah, absolutely.
Snap has a monstrous gap to fill at $28. Now, there's a couple of people that I'll talk to on the regular basis, and they don't think this is going to happen. That gap is way too big to not be filled. I just don't see that not getting filled. I see Snap coming down and that thing getting filled. So that's my analysis on this. This gap, it's just too huge. I mean, it gapped up to 34 from 28 and a half. So I mean, we're talking about $5-6 gap, you know. So maybe when the market does go red and everything's bleeding, this will come down pretty hard.
Yes, this Discord group that I have, they do like lives.
So space. This one's another one. Look at that gap. That's a clear gap. 27.5 to 30 and a half. So a $3 gap. Right? I expect this to fill. No question. And when it does fill, that's going to be the area it bounces at. All right. ETF. I think this is technology. It's got a gap to fill at 62.30. Right. We're at 90. We're at highs. I wouldn't be surprised if we see this thing fall down here. We're if you've noticed, a lot of the stocks that I just went over, everything's cresting like a wave. It's hitting a top and then doing that crest. Everything's doing it. Right? This one's got a great one to fill. Trip. 20 and a half. Up to 23 and a half roughly. I don't think it's far-fetched to think that that's not going to happen. Same thing with Uber. Uber had a huge rip. And at 36 to 40, that's the gap we're looking to fill. But it's got multiple gaps here, small ones, but it's got them. At least two more. They're small. Looks like we've already filled this top one. So you see when it fills it, it bounces, but it's going to come back down. It's going to fill the rest. I'm almost certain of that. Uber is just too high right now, in my opinion. UPS, I can't wait for this one to do it. I'm very interested in UPS doing it. So UPS at 124, gapped up to 137. I mean, that's a big gap. So when this gets filled, I'm definitely going in on UPS leaps. Same thing with Visa. I like Visa at 188 when that fills. We're at 193. When this fills, I see this being a pretty strong leap opportunity because Visa is, one of the best credit card out there, right? They're making tons of money. This gap fills, we're looking at support levels. Look at this. Let's see if I can get it. Here we go. This is what I'm really interested in with gap fills. Multiple levels of support. Right? Multiple. So if this thing touches this point here, and it's close, I mean, we're looking at probably a nice bounce. Although Visa might go sideways. Because if the market does go red like I'm anticipating, we're going to see this probably go sideways. So it's hard to tell if it's going to bounce or not. I just know that when the gap gets filled, it generally reverses. Walgreens. Let's see. We got a small gap, two small gaps down here to fill. I'm not too crazy about Walgreens. We'll skip that. Workhorse has a nice gap to fill down to 24, almost 25. All right, so when that falls back down to 24, 25, it's back in its wedge if it does it within the next 2 months. And I think it will. I think it's going to drop and then maybe they're going to have the USPS contract confirmed, and then it's going to do its rip again. And of course, Zoom. Had so many people ask about Zoom before. This gap right here, let's see, sorry, 324 to 349. Right, it's not a very big gap as far as percent goes, but it's filling it as we speak. Right, it still needs to come down just a little bit more, and I think Zoom's going to be primed for a nice rip. All right, so with that being said, there's questions. Let me just make sure I look at these
While you're
messages
at
first.
filling gaps and leaps, hostel, I think we're in the. I was looking at the Coca-Cola options leap for Jan 2023 at 55 call. It has definitely a gap up to fill at 55 back from February. Could you look at that chart for Coca-Cola when you get a chance?
You talking about this gap
Helio,
here?
yeah, some of those gap, but from a Helio's leap perspective, yeah, that gap definitely got filled up. I was talking about the one from February, the 55 on the gap up. So we're in the Jan 2023 55 calls with Tilio, the leaps.
That's a long-term position. That's 2 years out, right? That's not the same thing what I'm talking about, right? That's his expectation of this hitting $60 again, right? I'm not looking for that. When I do leaps a year out, I'm looking for month swings. I want to get out within a month and make 25 to 50% return on my position. That's what I'm looking for. That's why I get out the money. That's why I buy at support, because it doesn't need to go back up to $60 for me, right? Let's assume that this level at 48 is the number I'm looking to get into, right? I want it to hit 50 or somewhere right here, 53, or 55. Just this resistance point at 54. I'm okay with that. That's going to give me a 25% return guaranteed off of a leap. If you got a 2-year leap, you're not going to see as much. I'm not really sure, honestly. I haven't done a 2-year leap before to really understand the differences in prices. I'd have to go and calculate it with the Greeks, and I'm too lazy to do that. I can only tell you based off of how much money you'd make roughly on a 1-year leap and the strategy behind it, right? I don't know what Tilio's plan is. My guess is he's planning to hold this till it hits 60. And I think by the end of the year it will. Right? It filled that gap. You see here, this is a perfect example of when something fills a gap, where does it stop? Right? So this gap got filled right here roughly. Right? Now where does it stop falling? That's the question. Right? It looks like where it's at may be a good support level because we've got multiple points after July. All right, so now we're looking at 2 resistance levels acting as support. We got 2 support levels. Right? I think this comes down another dollar or two, and then it'll. I mean, who knows? This could be. So a lot of times with stocks, they don't like if something's in a long-term uptrend, it's not going to break lower support. It's going to come close to it and then bounce. We saw that happen with pets. It came down close to that $29 mark, hit 29 and a quarter. I wanted it at 29, didn't make it. I had a limit, or I didn't have a limit order in, but I was watching it daily and it never hit 29, and just happened to rip so hard that I was not feeling too good when I saw it hit $50. But whatever, is what it is. All right, people want to hear Tesla. I mean, Tesla's falling. It's going to fall. All right, it's going to keep falling, in my opinion. So wait till it hits a support area, and then you can buy calls, right? Don't bet against Tesla, but wait for it to fall. It's going to come down. It's just a matter of where, right? It's already started its downward trend. That's what Tesla does. It hits nice big highs, and then it'll probably come down to 600 and some change, 500, 500 if we're lucky, 500 and change. Let's see. I think NOK is one of those. Yeah, I'm not doing NOK. That's a meme stock right now. I mean, although it does have a nice gap to fill at 424. But I mean, this is one of those Wall Street bet stocks. Let's see. All right, who has questions? Start going through those.
Can you do TA for GDX?
Support.
After GDX, can you do GMI as well?
GDX is at support. I mean, I think this is the area we see gold and silver start popping, especially because SLVs did some huge monster jump when it came back onto the market today. So this is probably the time we see precious metals. Who knows? I'm not going to speculate. I will say it's at support. I expect this to fall. This is going to fall. Man, look at that MACD. That thing is so wide. Overbought. All-time highs. What else is there, right? All right, who else?
Hostile. This is Akshay. So you said about BA. So in the March, there is a gap around 125. Is it already filled or it's gonna fill in this down? I mean, somewhere, sometime.
BA at 125? Is that what you said?
Yes. Yeah, the March gap. I mean, is the uptrend when is it already filled?
I don't see anything in March. I see something in May at 120. Right here. I don't see anything in March. You talking about this big one right here?
On the left side, yes. That is already filled.
Well, look, it came back down, didn't it? It covered that gap.
Correct. Okay. Just wanted to ask that. Thank you so much.
Okay. Somebody else had a question?
Yeah, so I just realized that I can buy or I can do cash secured puts. I didn't think I could. I think it was FaZe or somebody talking about how much money you need to get into selling premium. How much money would you recommend I need to get into selling or into doing cash secured puts?
Well, it takes substantial amounts of money to do it. I think to be able to get into the plays that we alert, you need at least 20,000 to do all of them, or at least majority of them. And that's not to say you can't get into something. I mean, 5 to 10 grand is probably a fair starting point. You can at that point you could do like, I mean, two CSPs for 5 grand, right? And Neo, I think Neo 55Ps are paying $500, right? I mean, you need decent capital to do CSPs, honestly.
Okay, yeah, I'm definitely not there yet, but I know that CSPs are a lot easier, or at least a lot more consistent. So I was just wondering. Thank you.
You're welcome. I mean, they're way more consistent and way safer. So
yeah, I know you've always been saying that, and I didn't think I could on my account just because I can't sell premium. But I was looking over it last night, and I can do cash secured puts. But
Well, just because you can't sell premium doesn't mean you can't do CSPs and covered calls, right? Those are protected positions. They're not naked. They don't require margin, right?
right,
So
yeah.
selling options requires margin, with the exception of those two strategies, because they have cash to cover or call or shares to cover, right? So if it's a covered position, then the broker, that's actually level 0 on the broker. Level 1 is buying and selling, or I'm sorry, buying calls and puts. That's level 1. Level 2 is selling covered strategies like spreads and iron condors and iron butterflies. And then once you get to level 3, that's more like naked straddles and strangles. You know what I mean? So
Yeah.
that's selling
Yeah.
straddles and strangles, not buying.
Yeah, I've just been focusing on just buying and selling, or buying calls and puts, just because that's what my account can do. Thank you, though.
You're welcome. Who else?
Hey, Hostel. What would be the first book you recommend I read to becoming a successful trader?
I'd be lying if I told you there was one. I haven't read any books. Everything's just trial and error and practicing and getting on the virtual trading platform, testing things out, learning basics, coming up with your own strategy that works best for your interests and time, right? If you're working every day 9 to 5, you can't trade the market. You can't scalp, right? You can't go in and buy and sell options daily. It's not going to work. If you are on your cell phone at work trying to do that, it's a good chance you'll get in trouble at work because you're not doing work, you're doing stocks instead. So it really depends on, what will work for you as far as time goes. So there's all kinds of strategies out there that will work for you, even if you're working a full-time job, doing that 9 to 5 thing, right? There's still strategies out there that work. So it's just a matter of finding what works for you. And instead of spending the time reading books, I mean, it's like before I touched a Linux terminal, I read books and took classes. That didn't prepare me to manage a Linux server. I got onto it when I finally landed a job doing Linux, and I had no idea what to do. I mean, I remember reading stuff, and I remember doing this and that and doing labs and all that crap, but nothing prepares you for the real world like the real world, right? So the best way for you to get involved with the real world is the virtual trading, the paper trading for TOS. It's the best tool to learn how the markets work, because you can get on there and trade as if it's today, right? I mean, when the market opens tomorrow, you'll be able to get on there and trade it. I think there's a way to, I mean, with paper trading, there's a delay, I think 20 minutes, but I think there's a way to get it so you can paper trade live without a delay. I think you have to call the broker for that. But either way, you can do it. And that's what I recommend you do. Screw the reading.
Mm-hmm.
Don't
All
waste
right,
your
man.
time
Thank
on a
you.
book. You're welcome.
Yeah, I really appreciate that.
Okay. Who else?
I got a quick question for you, Hostile.
All right.
So you were talking about more advanced options, level 3 trading. At what level do you think? Because I trade at level 2 right now with my cash account. And I think the last time we even talked about this, you said like once you get to a point, which is like what you said, like 10K, then you can really start focusing on options to buy shares, which is what I did, and it's helping a lot. But what level should I start looking at, like level 3 trading, like the more advanced options? When should I start learning those, and when should I start like concentrating on those? What's my account value? What should my account value be, do you think?
Well, I would never recommend doing level 3 because it's pure naked trading, right?
Right.
When you're selling options in a level 3, you're leaving yourself to unlimited losses. So I would never ever recommend doing that. I would never go over level 2 trading.
Okay.
Now the levels are different on brokers. So Schwab is 0, 1, and 2. At 2, I can do spreads, sell options and spreads. 1, I can buy naked calls and puts, and 0, I can do cash secured puts and covered calls. Right? I can
Right.
do on level 2, I can do iron butterflies, iron condors, basically anything that's a spread. Right? Except iron condors and butterflies are 2 sides to a spread. I'm sorry, 2 spreads to a play. Right? So it's 2 legs. 4 legs actually, because you got put credit spread and call credit spread. Those are 2 legs apiece. So that's 4
Yep.
legs in each. So you got to have level 2 for those types of strategies. Now, I guess to answer your question, when is a good time to start doing those kinds of strategies, or rather, how much money do you think you need? I mean, to be honest with you, I wouldn't even bother with spreads. I just wouldn't. There's a lot more money to be made on CSPs, right?
Okay.
There's
Right.
just so much more money to be made there. Granted, you got to put a lot more cash into it. I mean, if you do the math and you put the same amount of cash into spreads as you do a CSP, yeah, you'll make more money in a spread, but the risk is way higher.
Right. Yeah, and you got to focus. You got to have more time on your hands. Which I too. I work a 9 to 5, so like it's a lot of automated trading that I have to set like alarms for, or,
Right.
alerts. So I mean, I'm just trying to figure out a good system to where I can build my account to where I can eventually quit. But trying to get that
Well,
information.
the strategy that I've come up with that I think is going to be the best one to really make huge amounts of money is what I'm doing, right? So it's a multi-tiered strategy, and I can't do the multi-tiered yet. I can only do one or the other because I don't have enough capital. So, example, I've got $1 million. I can put $500,000 into the market without worrying about anything, right? So let's just assume for a second I got 500K that I can put towards the market. I can buy multiple CSPs. I can buy 100 shares of any CSP that I buy, and I can buy leaps, right? So the goal is now there's a reason why I would choose one over the other. For example, CSPs, I need high IV, right? Premium's going to pay better. For leaps, I need low IV. Premium would be cheaper. Now, if
Right.
options aren't a choice, then I go to shares if I really like the stock, right? If I really want to get into it, and options aren't really a choice, this doesn't fit what I'm looking for. Like, even if, let's say, IV's low and I want to get leaps, or IV's high and I want to sell CSPs, but the open interest doesn't exist, then I go into shares, right? So if I can implement the multi-tiered strategy of doing those 3 types of strategies, you don't need anything else, to be honest. I mean, you got to think about hedge funds that are doing $100 million. They're not doing options. They're doing shares. Warren Buffett does shares. He's not doing options. He has way too much money to be trying to put into the market to do options, right? Options are for people that have $500,000, $1 million, 5 million, 10 million, right? Because then you can afford to throw 50K in options and be, whatever. It doesn't even matter at that point, right? If you got $5 million, what's 50 grand, right? And if you can make 500 grand off of that 50, well, you know what I mean? Like let's say I put 50K in leaps, and then I make 50%. There's 25 grand in a week, right? And if I got $500,000, I just made $25,000 like that, and it really doesn't make that big of a difference to my portfolio based off the size, right? So you got to build your account with something, right? And then once you get to a certain level to where you can start doing multi-tiered strategies, or multi-tiered investment strategies, then you can start implementing other things that are going to benefit you. But in my opinion, spreads are not the way to go. I started out doing those. They work well sometimes. You can make money, but I just think there's too much risk in spreads. Iron condors, butterflies, put credit spreads, call credit spreads. Now, Calendars and diagonals, that's different. I think those are safe spreads to do. They're considered spreads because you got two legs, but really it's
Right.
I wouldn't necessarily call it a spread, but I guess it is considered one. I
It's just
just
like a short spread almost.
yeah, it's you're selling insurance basically based off of you buy a leap, or in my opinion, I'd buy a leap on a diagonal or a calendar, and then I'd sell a call against it at the short front month and try and take in premiums until I wait, until that option rips. But here's the thing: when I'm thinking about doing that, how does that benefit me if I just sit on the leap by itself and um, that will pay me 10 times more, right? Especially if I buy leaps at support. So diagonals and calendars, I mean, they're great, but I don't know. I mean, unless you're looking for um, I don't know. I think diagonals and calendars they work well, but it just depends.
Safer with CSPs and whatnot. Just safer with that and running smaller spreads then.
Right. I mean, I will always stick to CSPs, leaps, and shares. Once I'm making too much money to where I can't invest in all three of those at the same time, maybe maxed out, I think I'm done trying to expand my account. You know what I'm saying? Like at that point, I'm going to be making 500 grand a month or something, right? I mean, so there comes a point where you got to ask yourself, do I keep dumping all this money in, or do I start taking some of this profit? Right? Because you got to compound your money, right? And at some point in the future, like the way I manage my accounts, I don't touch the profits. I just let it keep growing and compound that money. But at some point in the future, the idea obviously is to take those profits, right? So if I'm constantly compounding interest or compounding returns and never taking profits, and my account's up to $100 million, I mean, where's the limit to when you start taking profits, right? Because I'll be honest, if I see my account go from 10 million to 100 million, like that's a hobby of mine just to watch money grow, right? So, I might get stuck in it and never spend the money. I might not take money out to enjoy myself. So like I've got to put in a check for myself once I do hit a certain level. Let's take some money out and enjoy it, because that's the whole
Right.
idea of making it.
Right. See, like the way I'm trying to get it going is like get to like where I can take like 5 to 10% of my profits per like week or per month. So like $50,000 if I'm trading that, and I make like anywhere from 5 to 15,000 in a week just from leveraging it. I can take like 2,000, 3,000, live off of that. I keep my expenses pretty low, but just leverage it until I keep growing it, just increasing my monthly or weekly amount to where it's livable / like I can invest in other ventures like real estate and whatnot. But sweet, thank you so much for the information.
You're welcome. And I just want to add to what you're saying there. I mean, when you have to take out just enough to survive, I mean, personally, I would say get a job to cover that so that you never have to touch that money, so you can keep growing
Yeah,
it.
that's yeah. I'm gonna go as long as I can without having to do that. But like once I get to a level where I can leverage and make more than I like twice or 3 times as much as I make at my job, then I'll start looking at that option as an option.
Yeah, okay, that's fair then. I mean, so I have so as you probably know, I have Roth accounts and then I've got a brokerage account. My strategy here is to get my Roth accounts to $1 million a piece. I've got two, one for me and the wife. And then once they're at $1 million, then I can pull out whatever money I contributed to that, free of tax and penalty, and throw it into my brokerage account, and then start growing that while I grow my Roth accounts. And once I get my brokerage account to where I'm making $200,000 a year, then I can quit my job, right? Because you have to overcompensate making money in the market versus a job. A job is guaranteed money every month as long as you do your job and you don't get fired, obviously. So it's guaranteed X
Right.
amount of dollars a month. Whereas the market, it may or not be guaranteed, right? You might have to wait 2 months or 3 months if you're in positions that you just have to keep rolling or whatever the case. Like it's not going to be consistently every, twice a month I'm going to get paid. It just doesn't work that way. So you've got to be in the
No.
position where, you're making substantial amounts of money that are going to completely cover everything you need for the next, like let's say in 3 months I make $100,000. That's going to cover everything I need for the rest of the year, right? That's what you really want to go after is, can I make what I need to make to cover my lifestyle in 3 months? And then the rest is just profits, like to build my account. So then the next year, when it comes back around in that 3 months, now I'm making 300,000 or 400,000, right? That's
Yeah.
what you really want to
And
go
then
after.
yeah, and then you got to also factor in taxes. So like I almost think I think of it as with the mindset of like they're gonna definitely be taking like 30 to 45% of that. So you need to overcompensate with that even more. Just so you
Absolutely.
have that amount set aside for when tax season comes around.
Right, right, yeah. I mean that's a given, right? And that's why again I've been pushing Roth accounts so hard because you don't have to worry about that, right? So
Right.
the government, as long as you're paying taxes somewhere, the government's not going to really put a magnifying glass on you, right? But if let's say that all I have are Roth accounts and I'm making money off of those and never paying tax, government's going to put a magnifying glass on me. I just feel like that's just the way it goes because you're not paying taxes. So that's why I told myself I'm going to keep a brokerage account going so that I'm paying something in tax. So they're not looking at me and saying, "Oh, this dude, he's buying this, and this. And he's got all this stuff." You know what I mean? Like it's an unintended
You're just basically
consequence.
asking for
Right,
an audit at that point. Yeah.
right. So I mean, and going on the real estate portion, I don't believe in real estate until you're able to buy $1 million worth of properties. So 50
Right.
properties, 250,000 a piece, and you're putting down only 50%, which is, I'm sorry, 20%, which is 50 grand. 50 grand, you can buy 50 properties. And if 50 properties
Yeah.
is
And
paying
then you
you
look.
250 to 500 bucks a month, that's substantial, right? That right there alone will cover everything
Yeah.
you need every month. And it doesn't even you won't even
Then
need to
plus
trade at that
profits.
point.
Yeah. Yep. You basically just use trading at that point to get yourself into a better position with real estate, and then yeah, I get it.
I mean,
Thank you, sir.
with real estate, I would say for me the goal is 100 rental properties. Once I got 100 rental properties, and I start building residential townhome properties, so like 2 acres worth, I've got 100 townhomes that I can sell for $200 to $300 a piece. All right, let's say I invest $10 million or $5 million into this deal, and I can turn around and make 20 or 30 million, right? I mean, you know, generally the idea of investing in real estate is you put down 100,000, you make back 300,000, right? You try to make triple what you put into it, especially with big time real estate development, like multiple townhomes or like a commercial real estate where you build a shopping center and then you get tenants in there and they're all paying you anywhere from 2,500 bucks to 15,000 a month. Like, grocery stores, big grocery stores, they're paying ten to $20,000 a month to rent out that food line or that Harris Teeter or whatever it is, because it's such a massive space. It costs a lot of money for them to rent out. So I mean, in that
Right.
scenario, I know a guy, he invested $7 million into a commercial real estate venture, right? And he built what was the damn um, a Lowe's uh, grocery store, and then there were probably another 15 or 20 smaller stores that are in the shopping center, plus like a Wells Fargo bank was there, and kind of like that little island area where it's like in the middle of the shopping center, and
Yeah.
then
Yeah, like a kiosk.
right, right. Well, no. It's like you got a Zaxby's or like a fast food joint like Wendy's or something, Taco Bell, and then you've got like a
Yeah.
bank and that kind of thing. That he built all that. He sat on it for 2 years. He made $2 million in rent or 2.5 million in rent, right? So that brought his cost average down to $4.5 million that he had invested, and then he turned around and sold it for $25 million. Like, that's where the real money is. Once you've got money and you're making it in the stock market, and you can, you're making $1 million a year, let's say that, and then the next year you make 2 million, then the next year you make 3 million. Now you've got $1 million to start investing in other things like what I'm talking about with 50 real estate properties. And then the year after that, so let's say it'd be impossible to fund 50 properties quickly and for that same number and the same rental prices and everything. But over time, when you've done it for 5 years, the first year you made $1 million, you're going to put that towards real estate, and then every couple of weeks you're looking for properties and buying properties, etc. After 5 years, you've got 150 properties or so, and just them properties alone, you're making 50,000 a month, 100,000 a month just on real estate, which, mind you, can be written off. So all the money that you make on real estate is basically tax free because of depreciation value, right? So, and then once your depreciation value, or once you get to a point where, let's say you've got 50 to 75% liquidity in those properties, you can go and refinance every single one of them, take all the cash up to 20% left, and put it in your bank. So you're basically taking what those people have been paying off those properties with over the years, 5 to 10 years, 15, whatever.
Basically reinvest it, yeah.
I mean, you don't even have to do that. You can just, I mean, at that point, let's say you've got 50 grand or 100 grand in each property plus the 50,000. So you 150,000, the property's 250, right? So let's say your liquidity is 150K. Well, initially you invested $1 million. Now you can refinance all 50 of those properties and you get 2 million back, and you still have 50 million in it, right? So it's a win-win at that point because you're making so much money. And now you can just kind of do whatever you want. You can reinvest it, or you can dump some of those properties that ain't working out so well. Who knows? I mean, there's just a lot of things you can do with a lot of money, but you got to get a lot of money before you start doing all these other things, right? I mean, multiple streams of income is the best way to live life.
Yep.
But at the same time, you've got to position yourselves to have multiple streams of income. And I preach stock market so much because you can position yourself by making good money in the stock market to where everything else is stupid easy. Because you're not like, if I just try to go to real estate right now and I've got 2 properties, 2 mortgages, that's pretty stressful, man. I have to be honest. Like, I'd be stressed out. It'd be hard to sleep at night. I'd be constantly worrying about what if this renter messes up my house, number one. Number two, decides to just leave, or COVID happens and now they're not paying me rent at all, period. Right?
Yeah.
So, that's why I always tell people or whoever asks, should I do real estate or should I do stocks? Do stocks. Right? I mean,
Right. 'Cause
250
it's all on you at that
grand.
point. Yeah.
Like if I bought a property for 250K and rented it out, and let's say I made $2,000 a month, right? That's $24,000 in a year. With 250K, I can make 100,000 to 200,000 in a year. Matter of fact, my portfolio this year went up 105%. So if I had a $250,000 portfolio, I'd have a $500,000 right now. Whereas that $24,000 that's taxable, mind you, that your real estate paid you, that's chump change. You know what I mean? Like, that's trash. 24 grand versus 250K. That's trash.
Yeah, that's the overall plan though. Eventually, I've got 2 friends trying to get into a house right now, and I'm like, they're a little bit younger than me, and I'm like, I don't say anything right now because I'm like, no, you'll either learn or you'll get yourself in a weird situation, man. But yeah, I chose to go the stock route because I learned a valuable skill set, and like if real estate doesn't work out, I can always go back, make more, and try again.
Right.
It's something I can fall back on, and I don't have to get a job at that point.
Right.
Like, I can.
Once you got something that's creating consistent returns, you can start branching out.
Right.
That's the beauty. It's amazing. I love that idea. I mean, I may not make it there. I may not get to commercial real estate. Hell, I may, by the time I start even considering real estate, I might already be at the point where I'm like, man, I've got $100 million or $50 million or 20 million, and I'm making 200,000 a month. Why do I need to go through all this extra stuff? Right? I mean, if I just want to throw money at something, if I want to throw darts at a dartboard, then maybe. And if I feel like I need to diversify and have multiple streams of income, sure, why not? F it. But if I'm enjoying stocks and I'm making $2, $3, $4, $5 million a year, I mean, do I really need, like, how much money do you really need?
Yeah. It all depends on your lifestyle, man, I guess.
Right. And if you come from, making 2,000 a month or even 5,000 or 10,000 a month, I mean, it's still not, it's not going to be like 100, 200,000 a month once you start making that. Right? So when you start making those big numbers, there isn't anything out there you couldn't want except like buying a building in downtown Manhattan, right? I mean that, I can have any car I want. I can go on any vacation. I can have any house I want. I mean, the sky's the limit at that point until you start
Yeah.
trying to do buying $100 million islands and $50 million yachts and stupid shit that is just a major waste of money.
Yeah. And it's funny you should mention it. Yachts are like, they take so much monetary value to even like maintenance. It's ridiculous.
Well, not only in the maintenance, it's like depreciation on one of those.
It's yeah, like you buy one for like say 30 million, it depreciates to like what, 12 to 10?
Probably, yeah, probably.
So that's 50% of your value completely gone.
Just paying to park a yacht costs millions.
That's
Yeah.
retarded, man. But that's for people that got so much money that it doesn't even matter with it. They could go fucking make a fire with it and it wouldn't matter. They could throw $100 bills into a fire and be like, this is my tender. I mean,
Wolf of Wall Street V2.
In the south of France, they auction off slips to highest. It's crazy.
Venice or Spain, Marbella. Yeah, if you look there, it's crazy how expensive it is.
I got a quick question for you.
All right.
So out of your 3 strategies, you kind of put shares at the bottom. Is there a reason for that? Like, do you just not enough returns or what?
It's not that it's not enough returns. It's just they make the least returns, right? And shares is where you should start, right? It's entry level. It's the safest thing to do. You can definitely make money. I mean, if I'm making so much money at one point in the future, shares is all I'm going to be able to do. Right? When you look at certain options, there's just not enough. Right? I mean, yeah, I could do Apple, I could do Tesla, I could do Netflix, AMD, I can do the big names. But what if I've got too much into those? Like, I don't want to over leverage myself into just, five of them or whatever the case. So you've got to diversify the positions that you're in sometimes. So if you get into a situation where, you've bought up everything on your list in cash secured puts, for example, or leaps, and then I've got, 10 other things that are really good things to get into with shares, but I'm not confident on, buying options or again, I put shares at the bottom really based off of open interest, right? So if there's no open interest for either type of play that I'm interested in, so like CSPs I need high IV, leaps I need low IV. If I choose either one of those and the open interest doesn't exist where I want it to be, that's where shares come into play, because I still find value in the stock. If I went that far to look on the option chain and say I want to buy something here, it doesn't exist based off of open interest, then I'm going to go with shares, right? Because there's still money to be made. And when all else fails, shares succeed.
Got it. That makes sense. Thanks, man.
Hey, I got a question.
All right.
Hello? Yeah, earlier you said not to do like naked calls or puts. But is it a really bad idea to do like short strangles like weeklies or straddles?
You're selling to open?
Yep. Yep.
I mean, it's a terrible idea, especially with short time frame. The shorter the time frame, the less chance you've got. I mean, you're putting probabilities against you, right? It's got to stay in between the section or an area for you to make money on that. And what if it pumps in one direction, right? I mean, what if it goes completely against you in one direction? You're going to be down big money. So don't put
Gotcha.
yourself in a
Okay.
position where you're at risk of unlimited loss. I would completely stay away from positions like that.
Gotcha. I mean that's why I said like maybe considering like a weekly, but yeah, I guess it's not a good idea.
Hey, Hostile, I had a
Alright.
question.
Okay.
For theta decay, does theta decay during the day and also for weekends? Does it count as 2 days of theta decay?
Yes.
Okay, thanks.
You're welcome. Okay, who else has questions?
Hi, this is my first time in a class. I just had a quick question.
Okay.
I'm not familiar with the graphing platform you're using, but I like it a lot. What is it called?
Thinkorswim.
All right, thank you very much.
You're welcome. Who else has questions?
All right, I lied. I have another question. It's quick though.
Okay.
How long have you guys been doing this?
Like the server or trading in general?
This server in particular, because I came across you guys on Instagram like a month or two ago, and I kind of just was watching your posts, and I was seeing some of the people say that you guys did stuff like the live classes, so that's why I decided to finally hop in. And I was just curious, like how long I missed out on this, because I've actually learned a lot tonight. It's been very informative. I appreciate it.
That's awesome. Well, we've had the server since April. I think I've been doing live classes since maybe June.
All right, that's insane. I really wish I would have stumbled across you guys sooner, but I'm glad I'm here now, I guess, because I definitely think you guys can help me learn a lot. I appreciate it.
Yeah, of course. Make sure you keep coming back to these live Q&As with more questions.
How often do you do them?
Twice a week, 9 p.m. Sunday to Wednesday. There's other classes that happen as well. Look on let's see, there's an actual announcements. There's a live class schedule that's posted there, and it gives the times for each speaker.
Beautiful. I appreciate it.
You're welcome.
Yeah, so I had another question about your QS CSP that you have.
Okay.
Considering the bear market, what's your plan with that put? Do you plan on rolling it once it's close to expiring, or is it just you're gonna take it?
I plan on rolling it if I have to. Absolutely. It filled a gap that I was looking for it to fill. I did get it at support, which is 45. It went lower than that, So I mean, I'm still gonna make money right now. I'm $40 is my break even at expiration. So if I have to roll it, I'm obviously going to. But it's got this nice huge gap that it needs to fill, which is right here. It needs to fill that. It's filled all those other gaps. So I expect this, regardless of what happens with the market. So I don't anticipate the entire market, everything to go down, but I would say a chunk of it definitely will. Now, it's impossible to determine which ones of those are going to be the ones to come down, right? QS is down as it is. So I expect this to come back up, to be honest with you.
So considering that gap needs to be filled, say at expiration it's at $44 and that's still under the 45, would you rather take the shares expecting it to go back and fill the gap and then sell the shares there, or just do another CSP?
So what I would do is close out my position with profits, number one. So if it's at 44 at expiration, that means I've made right around 400 bucks. I'm going to take that, and then I'm going to get back into the position, yes, with a CSP.
Okay. Awesome. Thank you.
You're welcome.
While we're on the topic of QS, I got in at around $50, $52 in QS, and I got in a little heavy because it's backed by Bill Gates, solid company, looking up good. The fundamentals are looking, and as you said, it has a big gap to fill as well. But there's a lot of sideways movement. Is there any like indication or something that I can lean on for an approximate time frame to get that potential gap up fill and see how much time my money will be locked? Because I'm looking at that around same gap fill around $67, $68.
I'm sorry. Ask your question one more time. I was getting messaged. It was throwing me
Oh
off.
yeah, no problem. No problem. So my question, since we are on QS, my question was regarding the QS. I got into QS around 50, 52 level, and with the same intention that it's gonna have the. I listened to one of your lectures previously and learned a lot about gap filling. So I do think that it's gonna fill up the gap, around 67, 68, and that's when I'm looking for my exits. It's a solid company with respect to fundamentals as well. It has backing by Bill Gates and stuff like that. Is there any indication or is there any thing that I can lean on to get an approximate time frame, how much longer my money would be locked in, just on a high level? I know there is no timing the market, but
So
anything
are
in
you
your
in
experience?
shares or options? What kind of
Shares,
position?
shares, around $52,
So
and looking for that gap up.
I would just say that, I mean, I'm not sure if you're. What I would just suggest is set a limit exit order at the top of that gap. That's it. And walk away. Don't even pay attention to it anymore.
Yeah, that's what I did. I have a limit sell set up at $70. But I was just kind of looking for how long would that money be locked up, because it was looking solid and I thought it's going to fill up quite soon, but it
There's
doesn't
no
look like it
telling.
will.
I
There's
I
no
can't
telling.
begin
Okay,
to tell
absolutely
when
no high
something's going to
level.
get filled. Yeah, I mean, it's impossible to say. What I can say is that it has no more downside gap to fill. So unless something really negative happens, this is going to come back up. It's at support. It's filled as bottom gap. The only gap left to fill is the top one, and chances of it filling that top one are high on the list of probabilities for me.
Gotcha. Thank you. Appreciate it, Hostel.
You're welcome.
Hey, Hostel, what do you think about RWT?
RWT. That's been sideways for a while. I don't like that. I don't like sideways stuff. I can't make any money sideways, unfortunately. It's all just sideways. I mean, it moves too slow for me. That's what I think, I guess.
Okay, thank you.
You're welcome. Okay, anybody? Who else has questions?
Hey, Hostile.
Hey,
Well, tomorrow, do you expect the market to take a big hit,
I don't
like drop?
I don't begin to put expectations on the market. I just wait for it to do what it's going to do, and then I pick my points as to where I think is a good place to get in or out of something. But I try not to speculate on which direction the market's going to go because, I mean, it's might as well go to the casino and bet red or black at roulette, and that's about as close as you can get to anticipating market movements. I mean, we're coming up into a bearish time frame, so I mean, I expect some red. I expect more red than green. You know, we're at all-time highs with a lot of things, so I expect more red than green. But that's about as close to it as I can say.
Thank you, man. I appreciate it.
You're welcome. Okay, who else?
Yeah, I have a question.
Okay.
All right, so with short selling basically, how do shorts expire? Is it like puts or
No. You're short selling. You're selling to open an option position. Are you're not buying puts. Okay, buying puts and short selling are two very different things. Buying puts, anytime you're buying anything, you're going long. Anytime you're shorting anything, you're selling. All right, so you're basically when something is quote unquote shorted, you're borrowing those shares or that position to get into the market. And there's an expectation that it doesn't go against you, right? And when it doesn't go against you, that's where you make the money, right? Versus buying options, you want it to go obviously in the direction for you, but if it goes against you, you just lose what you put in. But when you're shorting, there's more to lose than you put in. Well, number one, you didn't put anything in because you're getting paid money to sell or short something. So there's a lot more risk that comes with shorting. And that's why myself and FaZe recommend never to do naked shorting. Because if you do naked shorting, there's unlimited loss. Does that help?
yeah, it does. Also, can you further explain like how you like gain profit from shorting? I've looked it up and like still can't get an idea or like get a basis of how you gain profit from short selling.
Well, what type of short selling are you talking about?
Short selling like stock or something, basically.
Just shares?
Yeah.
Okay.
Shares.
So if you short shares at $30, you want the price to fall. Right? So you're borrowing shares at $30. So they're not yours, you're borrowing them. So when you borrow them, you're basically saying that I'm obligated to pay out these shares at $30 or higher, right? But if it goes down to say 25, that's where you make your money. The difference. So you have to, when you borrow something, you've got to, you're basically borrowing it and saying, all right, I'm going to take these shares to the market. I'm going to sell them at $30. I'm obligated to pay out at 30 or higher, but I'm going to sell them at $30. And if the price goes down to 25, I'm going to buy them back for 25, and I made 500 bucks, assuming it's 100 shares, right? But if it goes to 35, now I'm down 500 shares. So I'm obligated to pay back that 500 shares because I borrowed it at 30 and it's at 35. So I'm obligated to pay back because I'm down. Does that make sense?
Yeah, kinda.
Just remember with shorting, if you're shorting a put or shorting a call, you need, so with a put, you need, if you're shorting a put, it needs to go up. If you're shorting a call, it needs to go down. So it's basically the opposite of buying options, buying puts and calls. Right? It's the opposite of that. And instead of paying money to open a position when you buy a call, if I sell a call, I get paid money to open that position. So they're paying me for that position. So I need that position to fall in value so that whenever I go to buy it back, because I sold it initially, so when I buy it back, it needs to be cheaper than what I sold it for. Follow? Shorting is complicated and confusing.
Yeah, now I get it now. Thank you.
All right, cool. Okay, who else has questions?
I have a quick question.
Okay.
I have an account with about $100 in it. Where would you suggest I start with options
I
to
wouldn't.
get extremely small gains? Where would you suggest I start?
Shares.
Shares?
Because with $100, I mean, you know, you're yellowing basically. There's no other way to put it. You're putting all of your account in one position, right? I mean, you're gonna have to do that with shares anyways, but it's a lot safer to do with shares. I mean,
Okay,
I
I'm
recommend
still very new.
I recommend people start with 1,000, 2,000. Right? I mean, you
Okay.
just can't do much with $100, unfortunately. I mean, if you make 100% return on $100, you made $100. How many times you got to do that till you get to 1,000? I mean, obviously we all got to start somewhere, and if that's the best that you can do right now, I mean, you know, there's no harm in that. I'm just saying if you got extra money to put towards it, I mean, I would start with 1,000 or 2,000 and do shares only. Wait till you get to 5 to 10 grand, then you can start going after other types of strategies. But I bet you, if you're doing share swings properly, like what Mario does, then you may not even want to do options at that point until you find something that's a no-brainer, right? I mean, I started with $700 with shares, and I made it to $34,000 before I started doing any other type of trading. It was all shares.
All right, cool. Thank you.
You're welcome. Okay, who else?
Hey, Hostile, is there an easy way to find stocks that are ready to break out?
Not really. I mean, you could use a scanner in Thinkorswim that looks specifically for certain things that may lead to finding breakouts, but you can't really find like there's no indicator or chart pattern or um, chart setup that you can tell Thinkorswim to say, hey, find this. All right, you're gonna have to like look at specific chart patterns that could lead to breakouts like cup and handles. You could tell TOS to say scan for cup and handles, and then you go out there and look for them, right? Or whatever it pops up. Then you just scan through them and look at each one that it pops up and see if it's worth your time to invest in, right? Um, the thing I don't like about that is a lot of times you're going to come across tickers that are probably not something that you should be investing in, right? So there's hundreds of thousands of different stocks out there. Let's say out of 100%, I would probably only be very comfortable with putting my money into 5% of them at best, right? And that's not because they're bad, just because I don't know anything about them. And there's a 50-50 chance that you get into something that might be going bankrupt, and if you don't do any kind of research on it, you're not going to know. So that's the danger of using scanners, is because it's going to pop up all kinds of stocks, and whether or not um, you know something about it or you don't, I mean, you're going to have to know something. You're going to have to put research into it, unless you're just going to be in and out today. Right? So if you're interested in trying to swing something, or if you have to potentially bag hold, then you know it's a little sketch.
Mm-hmm.
And I'm not saying scanners are bad. They're actually really great. But when I use my scanners, I look for stuff that is popular. I look for stuff that has liquidity. I look for things that have um, some fundamental support. You know, they got good earnings, they got good EPS, they got good um, what's shit, what's it called? PE ratios. They got good PEG ratios. You know, stuff like that. They've been around for 10 or 20 years. I don't like things that are new necessarily. I mean, don't get me wrong, I'll trade new stuff, but I don't like things that have been out for 2 years and they were $1 before and now they're 20 in 2 years. Like that, I don't like that.
Yeah.
But if something's been out for 5 years and it's steadily gone up and did some retracement and bounced off support, I mean, if there's data there in the chart for me to analyze to feel comfortable about getting in, you know, that's something that I look into. So when you do scan something, um, it's gonna take more than just the scanner. Unfortunately, it's going to
Uh-huh.
require you to do more in-depth research and analysis. I mean, I wouldn't recommend buying anything um, that you don't know anything about. I mean, at least if it's a company like, let's say, Starbucks pops up and you've never traded them, you've never even looked at the chart, but we know what Starbucks is. We know it's not going out of business. So at least that's a good starting point to say, all right, well, it's got a cup and handle. I can probably get into this and not worry about it going out of business, right? So those are
hmm
kind of some questions you got to ask yourself. Are they going to stay liquid? Are they going to stay in business for as long as you need to be into the trade? What's the maximum amount of time that you need to be in this trade? Do you think you need to be in this trade to make money, right? And then you have to determine whether or not it's worth it for you to get into the position based off of that information.
So even if I did just find a random stock that had a cup and handle, it would still be possible for it to fail and I guess go down.
Absolutely. I mean, I've seen company
Okay.
handles be fake ones and then they fall. And
Oh, okay.
so, I mean, that was just an example. Couple handles are generally pretty good. I like double and double and triple bottoms. They do really well to bounce, especially if those double and triple bottoms are bouncing off of support levels. Those are fantastic. But there's so many chart patterns out there, you know. I mean, pennant flags, bull flags. I mean, whatever you want to call this stuff. There's a lot of things to choose from, and a lot of those are breakout signals, right? Um, so it's really hard to determine, unfortunately, and you're just gonna have to like build a watch list over time. I mean, you know, you do your searches, you do your scans. Anything that I pick up off of a scan, generally I won't trade it for at least 3 to 6 months. I'll watch it, I'll pay attention to it, I'll put more research into it. But I generally won't trade anything new that I've added to my list. I'll watch it for a little while.
Okay. Thank you.
You're welcome. All right, who else?
I have another question.
Okay.
All right. So, what is your take on saying investing a certain amount of money in only high dividend yield stocks?
I think high dividend yield stocks are dangerous because there's a reason why they pay high yields, number one. Number two, your money's stuck in the market and you're relying on every quarter uh, return, which generally isn't that great. If you pick a good stock that's been around a long time, they're not going to pay you a lot of money, right? I mean, the ones that pay high returns in dividends, again, there's a reason why they pay high, right? So I would avoid very high yielding dividends. If you're really interested in dividends, go for something that's um, 2.5 to 6% at most. But I personally, I don't like doing dividend long-term positions because I can make more money off my money by flipping stuff than letting it sit and collect dividends. I mean, it's pretty boring. Number one, it's pretty boring, but number two, again, you know, if you're making 8% every 3 months, I mean, I can make 15 to 20% every 3 months at least, right? I mean, well, let me take that back. So dividends every 3 months, so it's annualized actually, because I've actually looked into this. 8% is annual, so it's a compounding amount. So it's typically like 2 to 2.5%, or 1.5% on your money, the leveraged amount that you put in, and over the course of a year you get 8%, 10% at best. Plus if the stock goes up. I mean, but we all know stocks go up and down, up and down, up and down. So you're not ever gonna really make a lot of money off the stock itself unless you're flipping it over and over, right? So I'm gonna do an example though. Exelon pays a really solid dividend, right? And they pay 38 cents, 38 and a quarter per share. Shares are at $41, right? That's a pretty solid dividend, right? So 41 divided by 0.3825. Oh, that's wrong. Hold on. I'm trying to find the actual percentage here. 0.3825 divided by 41. So, hold on. I got a better way to do this. So trying to figure out the right math, I just look on my app. My app usually tells me. But I'm going to do some other math to show you how much money you would make off of that versus flipping the stock itself. Right, so this is one of the better ones. I used to do dividend trading all the time, and this is one of the ones that I thought was pretty solid with dividends and returns. So the annual yield is 3.68% annually, right? And this is one of the better ones, right? So $41, it pays me 38 and a quarter per share. Let's say I get 100 shares. It's 4,100 bucks, right? So 4,100. I'm sorry, 100 times $38.25 for every 100 shares, right? Sorry, I don't even have to do the math. It's $38.25 every 3 months. That's what it is. $38.25 times 4. That's how much you make in a year off of dividends on Exelon if you got 4,100, basically 4,100 bucks into it, right? So now this is what I was looking for. 153 divided by 4,100. That's 3.7% return in 1 year, right? 3.7%. Now let's take a look at this. If I bought Exelon at, let's say, 35, right? And in a month, I sold it at 42. Well, I don't even have to do the math and tell you that's $700 in 1 month. So let's say I bought it again when it dropped to 39 and it pumped back up to 44. There's another $500 in a month. So monthly, I could flip this, give or take a month or two every once in a while, and crush any kind of dividend it could ever pay me. This is why I don't do dividends. Make sense?
Yes. Yeah.
All right. Okay. Who else has questions?
I
I
have
got a
another.
question.
Sorry, man. You can go ahead.
Oh, okay, thanks. So just to clarify, if I'm trying to play leaps on that list you sent out, for like say AMD, it needs to go down to fill the gap. Are you trying to play like a put leap down?
No.
Or you want it to bounce off of that?
Yeah, I want it to fill that gap, and then I'll get into long-term bullish leaps.
Okay, thank you.
Yep. Now, there are a couple there. Let's see. I think IBM is one that needs to fill a gap up. Okay, yeah. So like in my list there, that was one of the only ones actually that needs to fill a gap up. So what I basically put was hit 115 to then fill up to 130. So unless it says something like that, everything is downward.
All right, thanks.
Welcome. All right, other person had a question.
I have another question about breakouts.
Okay.
So if you see that a stock is squeezing or a pattern is forming, how could you kind of like estimate how long it'll take for it to actually break out?
It's hard to estimate time frame, right? I mean, if you could estimate timing, you could be stupid rich, right?
Yeah.
The thing that I always recommend is when certain things line up, like let's say you're buying options. If IV's low, it's at support, it's squeezing to the point where it's got to break out any day now, and it might take another week. Now's the time to get in, right? But give yourself time if you're buying options. So, you know, it's always best to look at something and say, well, I'm going to swing this. I know it's going to break out. I just don't know when. Maybe in a week or 2 weeks, 3 weeks. If that's the case, get 3 to 6 months out, guaranteed to make money. Because if it doesn't break out for the next 2 weeks, and you buy a 3 week contract, well, your contract's worth squat now. But if you buy a 3 or 6 month contract at that point, you've given yourself plenty of time to where it's had time to shake out and go neutral and sideways and consolidate more. Now it's doing its breakout. Or what happens if it breaks down, right? And you're in that position. Well, if you had bought a leap for a year out, it's okay if it breaks down because it's still guaranteed. If you're getting off support, it's going to jump right back up at some point in the future. And it's going to happen before your contract's worth trash. And you can still make money.
All right, man. That's really good advice. Thank you.
You're welcome. Okay, who else?
Hi, Hostio.
Hey,
How are you today?
good. How are you?
Good. Hostio, let's say if I want to do some swings on some options, which will be the best time frame? I'm talking about like probably 3-4 months swings.
You mean time frame as far as option choices, like which option to buy?
Yeah, like for example, to look at the RSI, when you change the time frame, like daily or weekly or.
So is there something in specific that you're looking at? Maybe I can try and look at that way.
For example, like solid stocks, like when I try to get in, where below, like RSI maybe at 30 or how will you get in on, let's say, like if you want to be on lips like between 3 months to 6 months.
Okay, so if you're looking to hold a position for 3 to 6 months, you want to add double the time. So if you're looking for 3 months, get a 6 month. If you're looking for 6 months, get a year.
That type of time frame, right? Look at those time frames like that.
I think I misunderstood you. So you're looking to get into a position, but you're trying to find what's the best time frame to analyze that position based off of when you should get in.
Yeah.
Okay. So what type of trading are you doing? Are you buying options? Yes, I assume.
Yes, I like to do with options or shares. I want to see what you recommend.
Well, my favorite time frames that I look at are 180 days, 4 hours candles, or 1 year, 1 day candles. You can't
Oh,
go wrong
okay.
with those, especially if you're swinging. Those are the perfect ones to look at because you can see everything you need to see in history to make a more informed decision. When you go close in, it's hard to make a decision based off of a close time frame because you don't know what happened 2 months ago if you're in a 30-day chart, right? And 2 months ago, it could have hit a much lower low than where it's at, and you think where it's at's a good low, and then you go look at 2 months out, and it's like, well, now you're getting in too soon or something like that. But in
Yes,
regards
yes.
to expiration timeframes, if you think it's going to take you 3 months to see what you need to see, then you need to buy 6 months, right? And if you think it's going to take 6 months to see what you need to see, you need to buy a year. But there's nothing wrong with buying year out stuff if it's going to do what you think it needs to do in a month, because you can still make a ton of money. I mean, I keep using my Apple example. I bought an Apple Leap, 100. Let's see, it was 128. No, it was a 130 strike, and it was a year out. And in 2 weeks, maybe 3 weeks, I can't remember exactly how long I held it. I was up 60%, and it cost me $1,800. So I was at $1,100 in profit with a year leap in 3 weeks that I expected to happen in 3 weeks. Right? So
Yeah.
it's amazing returns. Like, I don't know why everybody doesn't do that, other than maybe not having enough capital. But beyond that, if you're buying options, that's the way to go. Especially buying at support. Like, you cannot go wrong, in my opinion. You just can't go wrong because it has time. If you buy something at support and it drops below support in a week or two and stays down there for 3 weeks, in the next month or so, you're going to see profits on that. It's going to come back up. If you buy at the money, it will go in the money, and you will
Yes,
make
yes,
money.
exactly. Yeah, I buy a long term calls like 6 months, 2 years or 1 year.
Yeah, I prefer yearlies. Those to me are the best.
Now another question, Hostile.
Okay.
So I know when you buy in the money, you get more. I think you get better theta the time, and also better delta. But if you buy far out the money, the delta sometimes is like I guess like 20 or whatever, right? I guess the less that you put in, the less delta you get in. When that stock cross the strike price, the delta keep going up, right?
Yes.
Okay, I got you.
Everything
So
increases once it goes past that point. I mean, if you buy something far out of the money, let's use AMD as an example since I got it up here. You buy something far out of the money, delta's either going to be at 0 or 100, right? So far out of the money, it's going to be a low number, like 15. Right, 185 strike, it's $15, or I'm sorry, 15 delta. But once it gets to at the money, then it turns into 59, 57, 61. But once it goes in the money, it just continues to increase, right? And it'll go all the way to 100 or 99. I think 99 is really the max. 0.01 and 99 is what you're going to see with delta, right? And that's just how much money. Every time it moves up a strike, that's how much the value of that contract goes up. I think is how that works. I have to look into it again because I don't really use Greeks that much, but I did make a video on Greeks. So if you need real
yeah,
specific,
so let's say like before Tesla went all the way up to where it is right now, because I had Tesla when that was at 400. If I should have bought a leap, like a 1 year leap or maybe 6 month leap, where the strike about 700. So right now, if it's already 800, that delta be probably at least like over 60, right?
let me see if I can understand what you're saying. So tell me that again. Now that I'm on Tesla.
Okay, so let's say when Tesla was at 380, remember, like a couple of months
Yep.
ago, and I should have buy like one leap, like 6-7 months leap, way far out the money, like 700, right? 700 leap.
Right.
So now that will be like the delta right now be like over 60, right?
Yes. So it looks like, just kind of judging by all the tickers that I'm looking at here, in the money, when it becomes in the money, it turns into a 60 delta. So that's the second one. Let me take a look at this. Let's see. So 61 delta in the money. That one's 75. This one's 54. This one's 57. This one's 59. This one's 59. 61. 61. So, I mean, generally what you're going to see is 55 to 65. That's about the average range. If something's at 70s like this, I think that just means that IV's huge, which it is, 171. I'm not really sure. I'd have to, again, look into Greeks and what makes delta, what makes the rate of change. I think it has something to do with the gamma and what's the other one? Shit. Let's see. Yeah, I think it's gamma. I think gamma is what changes the rate of delta.
Yeah, gamma, like every other dollar between the 5 plus 5 or minus 5 is where gamma kind of affects the option. After that, really do not.
Yeah. So I mean, but it has a relative area of where the delta is going to be based off of where in or at the money or out of the money it is. Right?
It's like the gamma is really plus where the strike price is at that time, plus 5 or minus 5 only affected kind of a lot right there. Either if it's going down, you're losing, or going up, you're doing good. But it's only on $5 really.
Yeah. So did I answer your question?
Yes, sir. And
Okay.
so you say I do the 1 day, 1 year, and which is the other one you said the time frame was 4 hours? What?
180 days, 4-hour candles.
4 hours, 180. Okay, I will write it down. Thanks, Costume.
You're welcome. Okay. Who else?
Hey, Hostel, have a. Can you hear me?
Yes, I can hear you.
How you doing? I have a ticker that I'd like to check out. If you could give me a little advice on it. I have a call for what is this? February 12th.
What's the ticker?
And the ticker is MCD.
And what is your position?
February 12th, I have a 240 call.
This looks like it's downtrending, to be honest with you. Soft, slight downtrend. There's no support.
Okay, so
I mean, we got support somewhere right around, I guess, 193.5. That's kind of far down, especially in options.
okay, so you would advise that I get out of it.
I don't advise what you should do. I'm just going to tell you what I can see. You're going to have to make a decision if you want to get in or out of that.
Yeah, that's fair enough.
Yeah. I mean, it's
Thank
at
you.
short-term support. At 207 is short-term support. And it looks like it's doing a lot of wicking. All right, if you look at this, I mean, that's maybe not too much. I mean, so from a distance, this looks like wicks. All right, I got 1, 2, 3, at least 3 big wicks. So that, I mean, that kind of tells me there might be some strength here, but it's just really hard to say, right? I mean, I think McDonald's is a long-term uptrend company, but we're in a period, a bearish period, a time frame. So I wouldn't be surprised if this falls. That's all I'm saying.
Okay, thank you.
You're welcome. Okay.
Hey, can you hear me?
Just barely. Let me see. Your volume's up pretty good, so.
And also one more question: do you have alerts too? Do you
No, I
about
don't.
alerts?
I don't really do any alerts anymore. I mainly, I mean, I'm kind of the support team manager, I guess you could call it. I mean, I have quite a few responsibilities on the server. I don't really have time to alert. Plus, I decided not to alert because we have quite a few alerters out there as there is. But the people that do my types of strategies are Mario94 and FaZe. Both of them do the type of trading that I do. So you're going to get the same kind of value out of them as you would if I were to do alerts. Maybe better, who knows? But they're really good. So I suggest if you're interested in the type of plays that I do, they're going to give you the same type of stuff. Minus the
Okay,
leaps.
great. Thank you.
You're welcome.
All right, thanks.
Yeah, I don't think they're doing leaps, but they definitely do. FaZe does cash secured puts. Mario does shares. So those are the two go-tos in my opinion. Somebody
Hey,
else.
Hostel, can you hear me now?
Yeah, I can hear you now.
Awesome. So, man, I'm just getting started with stocks. I've got a lot of capital, and I really like this CSP style, for me to be able to learn and very consistently with low risk make some money. So I appreciate you putting this info out there, and I'm looking to dive in. I'm so confused. I watched the Real Strategy video, and from the way I understand it is you're selling puts and making a premium, and then you're buying a put for the CC going down. Am I understanding that correctly?
I think so. So you sell cash secured puts. You want the stock price to go up. You want it to expire out of the money so you can keep the premium. With covered calls, you own 100 shares and you sell a call against those shares, and you don't want the price to go higher than the strike price you sold to keep the full premium.
Okay, so basically, if you make a strike price of 22 and you want it to go above that, 24, so you actually you're debited, and then you do the CC going down when the timing is right.
No. So when you're selling options, you always get paid a premium, right? So when I sell a cash secured put at $20 strike, that means I need $2,000 to cover that position in case it goes against me. If it goes against me, then I will take assignment of shares unless I decide to roll. But let's just assume that I take assignment of shares. All right, so if that position that I sold a CSP on at 20 strike paid me $200, my break even is at $1,800 with those shares. All right, so now I'm going to look to sell covered calls at the 20 strike and hopefully take in $150, right? And if it goes in the
Right.
money, it takes my shares away and I keep the total of $350 in premium because that's what I got, 200 from the CSP, 150 from the covered call. Now, if I never sell covered calls unless I get assigned shares on a CSP. Like, I don't just go out there and buy shares of something and then decide I want to do covered calls. That's not the wheel strategy. The wheel strategy is you sell cash secured puts, you roll it until you can't roll it anymore, until you have to be assigned shares, and then you start taking or you start selling covered calls at a strike price that you got assigned, basically, so that you keep the initial premium plus you keep whatever premium that you got to sell that call in the event that it calls away your shares. Does that make sense?
Yeah, it's starting to make a little bit more sense. But you're also not doing the covered calls until the timing is right as well. But how much time in between the two, the CSP and a covered call, is it typically?
It's really hard to say. I generally try not to get assigned shares if I can help it, specifically because I just want premiums. I don't want my money to go into shares. So hopefully, ideally, I never get assigned shares. Um, if you want to own shares and you're long on a stock, that's different, right? That's going to be a situation where, like Apple, let's say Apple, for example, you bought it at $110, you think it's going to go to $300 the next year or two, right? You don't want those shares to get called away, right? Let's say you get 100 shares, that's $11,000, right? And or $10,000, whatever, and you don't want those shares to get called away. So what you're after is, in that scenario, you want the stock price to jump and hit the resistance point on that stock, and then you sell a covered call there at the money, right, to get the most premium. So you sell covered calls at resistance. You sell cash secured puts at support. So assuming you want to own those shares, you definitely want to sell at resistance. But assuming that you got assigned shares from the CSP, you at a minimum want to sell covered calls at the strike you got assigned, so that you keep both sides to the premium.
Even if what if it keeps going bullish? Or are you saying you sell it all of it right away?
The covered call?
Yeah.
So if it keeps going bullish, you keep rolling until you can't get credit anymore. Right? The idea of rolling with credit is because in a covered call, if the stock price goes to 140, you sell a 140 call, and then it goes to 145 and it expires in 3 to 5 days. You want to try to roll that position up 2 or 3 strikes if possible for more premium, right? Because when you roll it, not only are you getting premium, you're also increasing the value of those shares, because now instead of getting called away at 140, they'll get called away at 143. Let's say you roll up 3 strikes, but that'll be the expiration, the following expiration, right? So when you roll, you're taking that current expiration that say expires on Friday, and let's say you roll out to the following month, then you're going to have a whole entire 30 more days to be able to have that position fall back under that strike price of 143 now instead of 140, right? And if it keeps pumping, at some point you won't be able to roll for a credit. But the idea is to roll up as much as you can, because the price of your shares are going to go up in addition to taking in a premium when rolling. Does that make sense?
Yeah, that makes sense. I think where I was confused, because I'm so brand new here. I thought that you pretty much, it's like cut and dry. You buy and sell, but I guess what I'm confused on is the rollover and how you can control that.
Yeah, the rolling is just a way to prolong the position, because you don't want to let the shares go in a covered call. And if you can, you want to roll that strike price upwards. So not only you take in the credit, but you increase the value of the shares that you currently own. Right? So you're basically making profit in two ways in that scenario. Right? But if it
Okay.
pumps up so
Okay.
hard and so fast that no matter what you do, you can't roll for a credit, well, it might be time to let those shares go, right? I mean, so timing is fairly important for selling cover calls on shares that you want to keep. If you don't want to keep them, it don't matter what time frame. You sell the strike that you got assigned, right? Or whatever price you're comfortable with, letting them get called away. That's what you sell. But in this scenario, if you want to continue to hold those shares for 2 or 3 years, you want to try your best to manage that position where you can roll it both the strike up and the time out. Right? So when you're rolling, you have the ability to move the strike and the time frame.
Okay. That makes sense. So if you set it, like you suggest, 30 to 60 days out for the CSP, if for whatever reason I want to move it past the 60 days, this is just hypothetical, right? 5 days before then, I can move and let it roll.
So if you're in a cover call and you've let theta do its thing, let's say you got a 30-day, or let's say you got a 60-day position, and we're on day 50 to 55, and you're in the money. So let's say you got a $50 strike, and it's at 55.
I'm about to learn though.
Then that's you're not going to get those shares called away until end of expiration. But if you're deep in the money, so you got a 50 strike and you're at 70, there's higher chance of those shares getting called away sooner, right? So it kind of depends on where you're at as far as in the money, and this could probably be understood a little bit easier with extrinsic value, but I don't want to confuse you. So, shit, I forgot where I was going with that. Did I answer your question, or maybe re-ask it?
Yeah, it makes sense. I mean, overall, it's just risk tolerance and how quick in and out I want to be in and out of that trade. And even if I want to hold on to those shares, I can hold on to them and try to make as much credit as I can. If I want to get out, I can just sell it all after the CSP. It's kind of what I'm understanding here. Is there any like particular video for like a brand new newbie to understand this a little bit more clear? I've watched some of the training videos on options and spread options, and I just wasn't still quite understanding the differences between buying and selling calls in conjunction with buying and selling puts, and why they differ from one another.
Well, one's going long, one's going short. So you buy to open, sell to close, that's going long. When you're going short, you sell to open, buy to close. Right? Those are two
Right.
very
I get
different
that.
things. And when you buy a call, you want the price to go up. When you sell a call, you want the price to go down. Right? When you buy a put, you want the price to go down. When you sell a put, you want the price to go up. Right? So
Right.
they're basically a coin. One's heads and one's tails. It's the same coin. It's just one's the other side of the coin, right?
Right. So with CSP, you're selling a put though. Is that correct? And then I guess why sell a put instead of buying the call? Is it because
Because
there's more insurance, or?
no, number one, you have that right. I want the price to go up. The difference here is theta decay. So when you buy an option, theta decays and it hurts you. When you sell an option, theta decays and it benefits you.
Gotcha. Okay. If I'm understanding it right, when you're selling a put, there really is no time decay, right?
There is. It just benefits you. So,
Oh,
example,
okay.
you sell a put for a $200 premium. Here, let me use an example. Let's see. Laser. So I'm gonna go to February 19th, 19 days out. If I sell a put at $32 strike, I get 380 bucks, right? So
Right.
every day this loses $11, right? So what that's gonna do
Right.
is I got paid 380. So tomorrow it's gonna be worth 369. So if I wanted to close that position out tomorrow, I made $11, assuming the price didn't move, right? Assuming all things stayed the same. Right, but if I
Yeah.
bought this position at 440, tomorrow it's worth 429. I just lost $11. You got it?
Kind of, yeah.
So
I
buying
guess
and
that's
selling are again opposite sides of the coin. Buying theta decay, or when you buy an option, theta decay hurts you. It takes away value from your contract. When you're selling an option, theta decay adds value to your position because it takes away what you got paid for that position, right? So when you have to buy it back, buy to close, you pay less than what you sold it for.
yeah, that makes total sense.
So that's where your value
Okay.
comes in.
Gotcha. Oh, okay, yeah, that makes total sense then. So yeah, you're just making it better for yourself selling the puts. And okay.
Well, selling the
Um,
puts, it just gives you, it allows you to take advantage of time, right? Whereas buying options or buying calls instead of selling puts, and instead of selling puts, you go to buy calls. You don't have time on your side. Time is against you, right? So you need that buy to open call. You need that position
yeah.
to go up as soon as possible to make profit. Whereas selling to open that put, I need time to decay for me to see value on that position, or the position jumps up like I need it to in a call. So I have two ways out, actually three, but I'm just going to talk about the two right now. With a selling a put, I have two ways out. If it goes sideways and doesn't do anything, theta pays me. If it jumps up like I need it to when I buy a call, I benefit. I just won't make as much as the call, but I still benefit and I still make money on that position. Right? Whereas buying a call, you only have one thing, and if it doesn't happen, you lose. Right?
Yeah, that makes total sense. So like I say like day traders will probably choose buying a call and setting a stop loss rather on this scenario with CSPs it's the opposite.
Right. Yeah. So and that's why I say 30 to 60 days out, because the premium goes up based off of the time left. Right. Whereas if you're buying and scalping in the same day, you don't want to pay expensive stuff. You want to get the cheap stuff because you're going to be out of it today, and you're hoping that what you paid 20 cents for or $100 for goes up to 150, and you can be in and out of it same day. Whereas if I were to buy a leap, a year from now and paid $2,000 for it, it might only go up 50 bucks, and I've only got $2,000 in it. It's like, well, why would I take profits on 50 bucks? I'm going to wait, right? So
Yeah.
a lot of it depends on time frame, and just remember,
Okay.
BTO is buying a call, right? So you have to BTO to get in that position. You have to STC to get out, right? Buy to open, sell to close. Right? When I go to
Right.
sell a cash put, I'm selling to open or STO, and I'm buying to close to get out of that.
Okay, yeah, it makes sense. Yeah, this is really coming together now. I was I was so damn confused, man. I really appreciate it.
It's definitely not a
And then
beginner strategy,
yeah,
but you can do it with a beginner account because it's still relatively safe. But you have to understand how to manage the position based off of your goals. It's not as simple as let's get into it and then just let it play out. I mean, you got to have a goal in mind, right? And if that goal is, whatever that goal is, then you're going to manage that position based off of that goal.
that makes sense. I mean, dude, I'm brand spanking new, so like what I'm thinking about doing is just following, you guys pretty much make it cut and dry and say, hey, like don't be like me and stay in it. Go ahead and sell now. That's what I plan to do. As I'm learning, even if I'm making less money than what I could potentially make, hey, I'm still making money, so I don't care. I got a lot to learn here, so but it's really cleared a lot of things up. I appreciate it. I was listening. I've been listening for like an hour now. I heard you say because I have Schwab right now until I get my TD Ameritrade set up. But Thinkorswim and whatnot. But I want to get started with Schwab. I heard you say like level 0, and it's okay to do CSPs.
Yes.
Is that a pretty easy level to get activated just through a phone call, or?
I'm not totally sure, to be honest with you. I mean, I don't know so they have a vetting process, and if you answer any of the questions in a way that makes them think that you are a newbie beginner, they're probably going to deny you. So I would say to fluff it up a little bit, right? So if they say, how long have you been trading? You say, and if you've only been trading for a year, say 2 years. If they say, how long have you been doing options? You say a year, you say 2 years, right? But don't go overboard.
Right.
And the level 0 options, it's all covered anyways, covered positions. So, it's very safe, and unless you say I'm brand new, I don't know anything about options, that they'll probably let you have it, right? So,
Okay.
but I use Schwab to do CSPs in my Roth accounts, and I've got a TD Ameritrade or Thinkorswim for my margin account, right? And that's for more risky trades. But at this point, I'm only doing leaps there anyways, so it's not like I'm doing spreads anymore.
Gotcha. Yeah, that makes sense. I don't want to take up too much time. I have one more quick question.
Sure.
On the Roth IRA, you can only put in $6,000 a year. That's going to be not taxed. What's the high values that you see in that when there's inflation going on and that money's tied up in the Roth?
So, hold on, let me mute whoever that was making noise. So with a Roth, it's not about inflation. It's not about what you can make off of the $6,000 based off of inflation. It's about how much you can compound that 6,000, right? So initially, you start out with $6,000. If you make a 30% return, that's $1,800, right? Now that 6,000 is $7,800 next year. Plus, you throw another 6,000 at it. So now you've got, let's see, 10,000, 13,800, right? So then you make 30% on that number. Now it grows to what, 3,000, right? So every year you do that, you compound that money, right? So inflation is going to grow slowly and steadily, whereas you can compound your money much more exponentially, and in the future have a lot more money than inflation is going to inflate.
That makes sense. What is the standard returns year by year with the Roth, though?
Standard return is what you make it, right? It's not just an account like a CD, like a certificate of deposit. You don't just throw money at it and it makes a return. You got to put money in the account and then trade it like you would any other account, right? But the only difference is, number one, it's a retirement account, so you have to wait till 59 and a half to pull out your profits, And number two, those profits are tax free, right? So, example, last year I started with $34,000 in my Roth, right? This year,
Right.
or in 8 months, I turned it to 68,000. Right, so from 34 to 68, that's 100% return. All right, and that was not even like that has nothing to do with the 6,000 that I put in. All right, so then this year rolls around, I put 6,000 in. Right, so after I invested that for this month, I'm up to 82,000. Right, so 68 plus 6,000, that's 74. I'm at 82 right now. Right, so
Okay.
you're basically just turning your account value size into an exponential number every single year until you get to a point where $6,000 is like a drop in the bucket, right? Until you're making $200,000-$300,000 a month, or until you get to, I think, $1 million, you're making, let's say, a 30% return in a year annualized is $300,000, right? If you divide that up into 12, that's what you're making monthly. At what point does $6,000 become so small and insignificant that you don't even need to put it in there anymore? In my opinion, is when you hit $1 million.
Gotcha.
And
Okay.
from that point,
I guess I was confused. Yeah.
well, from that point, you can pull out every dollar you contributed, no tax, no penalty. All contributions are, you can pull them out without question. So if you invest for 5 years, that's $30,000. So in 5 years, let's say you get $1 million. 5 years, you can pull 30K out, and you can do whatever you want, and you won't be taxed or penalized.
Gotcha. Yeah, I guess where I was standing was I didn't quite understand how the money compounded from your contributions. I thought that you can only put 6,000 in a year, and then that was tax free when you're 59 and a half to take out that sum. But you're saying whenever you contribute, the more you contribute to it, it's you're going to make a return
Well, the more you
from that.
contribute to it, the more leverage you're able to gain when you get into positions like CSPs, right? So if I start with $6,000, I turn it to 7,800 total, and then I put another 6,000 in. $6,000 by itself, I can only do 1 or 2 CSPs. But if now I've got 13 or 14,000, now I can do double those CSPs, and my returns are double, right? So if I was making 30% returns, now I'm making still 30%, but it's double if you really think about it, because I doubled my account. So, I know a lot of people are confused about Roths, and unfortunately, the system that we all live in, no one is educated on how it really works. And I learned how it works from experience. And a Roth account is literally a brokerage account that has the retirement stamp on it. It's the only difference. You can do everything you can in any regular account in a Roth account. No difference, other than it's a retirement account. And there's stipulations on how much money you can put in, when you can withdraw, that kind of thing.
Right. Yeah, it makes sense. I guess if I already have a bunch of capital and I just want to have a regular account or an account with an LLC or whatever, I mean, I can go in and out of that and just place $6,000 into a Roth each year, and not have to worry about putting in and pulling out contribution. Am I understanding that correctly?
Yeah, I mean, if you got a lot of capital, then throwing $6,000 at another account, I mean, don't just throw money at it though. You got to trade it as well, right? You got to make sure that if you put 6,000 in there, you need to make something with it. Don't just let it sit there, because it's a waste of time. Then you might as well do a certificate of
Right.
deposit. The goal is to build that account up so much that when you're making 200 to 300,000 a year at least, the government gets zero. They get nothing from it. It's all yours. Whereas in that brokerage account, they're going to get it. They're going to get their piece, right? And the way I started mine is I've got two
Oh,
Roth
okay.
accounts, one for me and one for my wife. So that's 12,000 a year that I can contribute basically. So I'm basically doubling what I'm trying to do. And once I get to $1 million in each account, I've got $2 million. Now I'm making a minimum of 30% a year, $300,000 on those accounts. They're going to continue to grow until I decide to take money out of it, right? Until they get to 50 million a piece or something like that, right? If that's before I get to 59 and a half, then awesome. I'll pay taxes and penalties on that all day long. You know, whatever I make every month. If I'm making 500,000 or 250,000 a month, I can pull out 125,000. I'm sorry, I can pull out $125,000 every month, and basically the penalties and taxes on that is going to be 50% off the total number. So I'll be basically from 125,000 that I pull out. So again, make 250, pull out half, so that account continues to grow. Number one, that's the goal. It needs to grow. Number two, if you do start pulling money out because you're making a lot, let's say I pull out 125,000, split that number into 50. That's what I pay in taxes. Now I'm living monthly on $60,000+. Like that's insanely comfortable living, right? That's
Right.
if I decide to pull the money out before I'm 59 and a half, right? But my goal with my two Roth accounts is just to continue to let them build. And then once I get, again, to $1 million a piece, I'm going to pull whatever I contributed out of those and throw it into my brokerage. Now my brokerage is going to take over my job. Once I start making $200,000 a year, my brokerage is, I'm going to quit my job. My brokerage is going to be what pays me to live. And then my Roth accounts are going to continue to grow unimpeded. I won't be contributing 6,000 to those anymore though. I'll be contributing 12,000 to my brokerage account. So that's going to grow extremely rapidly. It's going to grow twice as fast, even though I have to pay taxes on it. Right? So the goal here is you pay some taxes with the brokerage, but then the majority of your large amounts of returns are coming from your Roth, and those are the things that you pay zero tax on. That's the goal. No tax.
No tax until you're after you're 59 and a half and you pull it out.
Absolutely. Now again,
And that's all,
if
that's
you're
all
making
contributions and everything. That's crazy.
yeah, that's like, I mean, like I said, when I get to $1 million, I'm pulling my contributions out and I'm throwing into a brokerage. So at that point, it's all profits. Every last dollar is just profits. So that won't be taxed until 59. I'm sorry, it won't be taxed at all if I pull it out after 59 and a half. If those accounts are showing $20 million a piece, right, and I'm making 30% returns in a year, right, that's 6 million a year times 2. I could easily pull out, $3 million from both accounts, pay 50% off the top, and I'm living like a freaking king, right?
Yeah.
I mean, that's if I pull 3 million out of both accounts, that's 6 million. Half of that's 3 million. I pay 3 million in tax, and I get 3 million to chill hardcore with. I'm flying private jets and going to Fiji every other month.
Right on.
So I mean, you don't
But-
have to wait till 59 and a half if your account is large enough.
Right.
Or
So
go ahead.
yeah,
Ask your question.
I just got started with Schwab, and I'm looking to get into TD Ameritrade, as I heard using that, but Thinkorswim is a better option to go with, especially for noobs and whatnot. Anyway, so you would suggest me just when I go to get an account with TD Ameritrade, just the very first one, go ahead and set up a Roth one.
Well,
and just slap 30K into it and start doing CSPs.
Well, it doesn't matter where you do the Roth account.
Okay.
Schwab is going to ultimately own Thinkorswim, so CSPs are pretty easy to do. Options are they're not terribly complicated to do in Schwab, right? In my opinion, Thinkorswim is actually the largest or the steepest learning curve out of any brokerage out there or any application software out there for trading. Right? I think Thinkorswim is one of the more complex ones. Also, when you open up a Roth, you're not going to be able to put 30 grand in it. It's only 6K, right? So it's going to take a little time for that to build, right? That's going to be the little nest egg that has to grow, right? And you can still put money in a brokerage, but I'll tell you this: if you're making over $213,000 in a year married, filing jointly, you can't contribute to a Roth anymore, right? If you're making $138,000 single, filing single, you can't contribute to a Roth. So there are limitations to how much you can make in order to be in the position to contribute to that account. Now, in 5 years, I plan to have $1 million. In 5 years, I would have only put 30K in. So I always tell everybody, start with the Roth. Don't even bother with the other thing unless you can, unless you're able to fill that gap based on, like, let's say you make $100,000 a year at a regular job and you're single. You can only make 30 grand before they start saying, hey, you can't contribute to a Roth anymore. So at least get your Roth moving. At least get that Roth account to, $200,000 or $300,000 to where it's relatively easy to make $100,000+ a year, right?
Right. Yeah, because none of that is taxed because it stemmed from the initial 6,000 only. It just takes a little bit of time in the very beginning to get it growing, huh?
Yeah, I mean, like I said, every year you can throw 6,000 at it. And if you're married,
Right.
you can open up 2 accounts, one for you and your wife, and now you've got 12,000. Right. So again, it multiplies times 2. Right. I trade both of my
Right.
Roth accounts exactly the same. My wife and mine, same trades, same plays. Because it's just much easier to keep track of, and I'm not worried about diversification necessarily in that sense. Right. So the goal is to grow those accounts so you never have to pay tax. I mean, that's who wants to pay tax? No one here wants to pay tax. Not even
Heck no.
not even socialists that scream everybody needs to pay their fair share. They don't want to pay taxes either. They're lying.
That's true. It's true. Now what? So that Roth IRA contribution so I am filing joint. I just can't be making more than that, whatever, 217,000 on to my personal name, right? So what if I'm making way more than that with my business account, and I'm paying myself X amount of dollars a year, 50 grand a year, for example.
That would be a question for a tax accountant or a CPA specializing in stocks. That I don't know the
Gotcha.
answer to that. And when you find the answer, I would like to know.
Yeah, man. My I should have known better. I've got a really amazing tax planner, and he saves me a buttload, man. So I'll ask him, and I'll let you know as soon as I get back from him.
Yeah, that'd be good to know. I mean, I don't think too many people are gonna. There's not a lot of people with that scenario, but it'd definitely be good to know.
For sure. Well, man, thanks so much for all your time. It's cleared up a lot. Can't thank you enough. Appreciate it.
Yeah, of course. No problem. Anytime. Okay. Who else? Anybody else? Anybody else with questions?
Hey, if no one else is going to ask a question, I guess I'll have a couple more. Are you only doing like CSPs and like some of these monthly long or week to month swing trades? Besides your long calls that you're holding. Or do you also partake in daily trades as well?
No, I don't do dailies. I don't have the time for that. I work a full-time job and I got a lot of priorities and responsibilities, so that type of trading isn't something that I can put the effort into. Um, most of my trades are CSPs. I do some year-long leaps, and if year-long leaps don't work, or if it's just not right for me to do, then I'll do shares. But typically, whether it be shares or leaps, I'm looking to be in and out of that position within 2 weeks to a month at most.
Gotcha. Okay. All right, cool. I just since I'm so new, I don't want to get too scatterbrained and lose focus on there's just so much to learn, like you said, with Thinkorswim and patterns and everything, man. I figured I'd just get started with these CSPs because it makes so much sense to me. And then just learn from there and I guess weigh my risk and my trades from there. Would you say that's a good route to go?
It's safe, I think. I would say that if you're going to open up a Roth, you might want to start with shares and get your account to 10,000+, and then you can start
Okay.
doing CSPs because you need 100 shares worth of cash, right? So if you want to get into a position that's alerted that says 60 put, that's your entire account, right? And with a small account, it's hard not to YOLO the account, right? And you're just going to have to at that point if you're doing CSPs. Even shares, you're going to kind of have to do $2,000 positions, so you'll be only doing three positions at that point, and even then, it's like it's kind of sketch, right? Because you never really want to throw your entire account at something, but you got to start somewhere, right? Once you get to 10,000+, you can start doing CSPs on the Roth. However, if your brokerage account, you've got $100,000, $200,000, you've got plenty of money to do CSPs. I think the minimum requirement is, I'd say, 20 to 30,000 to do CSPs with. They can be done with less. You're just leaving yourself with not a lot of other choices to get into, if that makes sense. Like with $6,000 Roth, you can only really
Right.
do one or two plays, right?
Right.
But if you've got 30,000, well, now you can do 6 or so, maybe more.
Yeah. Okay, cool. Yeah, that answers my question, man. I'm actually going to be starting with 30 on my brokerage and then definitely setting up a Roth with 6. No better time than now than the beginning of the year to get that going.
How old are you, if you don't mind me asking?
33.
Okay, so you've got 27 years until you're 59 and a half. That is an amazing amount of time to build that account up. I recommend you download my spreadsheet for I forgot what I called it. So I got a spreadsheet on my channel here on the server. Let's see, I got it pinned. So if you look at my channel, it's called, what the hell is it called? I pinned that thing.
I think you can still contribute 12 right now. Not mistaken, right, Hostel?
Yeah, you can contribute for 2020 and 2021. So yeah, you can put 12K in right now if you're opening up one today.
Nice.
Yeah. Thanks for reminding me about that, Danny.
How do you go about doing that? Like,
Appreciate
who
that.
do you have to call, or do you just have to call your broker?
No, not at all. So you set up the account, then you get your bank account set up to it, and then when you go to contribute to the Roth, for example, it's going to ask you which year you want to do it in.
Gotcha.
So that spreadsheet's called Roth IRA Compound Interest. It's a Excel spreadsheet I posted on the 13th of December. Have a look at that, and that will
Okay, what channel
actually,
was it?
in the education section,
Mm-hmm.
Professor Hostel is third from the top.
Gotcha.
And that spreadsheet will
13
help
December.
you. It'll give you an idea of what your interest is going to be. So like, the left side. So I actually made a video on it, just above it. But
Yeah.
I didn't put in annualized returns on the video, but I have it on the spreadsheet, the new revised version. So you got two sections. One is monthly compound interest of 2.5%, and then the other section, so it's like kind of split in half, and then the right side is your annualized return. So you can basically take the same formulas. If you know how to use Excel, you can take these formulas and start with your own contributions for the year or whatever. But since you're starting at 6,000, it's very simple. You don't have to make any adjustments. You can just input what you made this year. So let's say you made 50% return on 6,000. You just adjust the percentage numbers, and you can look at all the way down to 30 years of what you would make if you, and it's an assumption calendar based off of real numbers, right? So you can assume to say, well, this year I made 20%, next year I make 40, the year after that I make 30. You can do that, and you can see what you would be at in 10 years or 5, 10, 15, 20, 25, 30 years, right? So you can basically
Right.
forecast your finances as far as gains go with that spreadsheet.
Yeah, that's pretty awesome. It's pretty incredible how you can grow that initial amount and you're not taxed on that at the end of the year.
Oh, it's fantastic, and no one really knows about it, and the government doesn't want anybody to know about it because they want their tax money. And the reason why they put a cap
Right.
on it at 6,000 a year is because they know people, when they do figure it out, they're going to want to put way more money than $6,000, right? But what they don't know is, if you're good at trading, you only need to contribute for 5 to 10 years max. Because if you can flip that account like I plan on doing, I don't need to contribute any more to it.
Right. That's true. That's very true.
And they don't look at it that way. They look at it as if, oh, they're going to put in $6,000 and make 5% return a year, so they're going to always want to put 6,000 a year. I'm not interested in that.
Right.
Yeah, 5 years, 10 years max, and I'm done.
Hostile, where in the educational section is it again?
In my channel, Professor Hostel.
Hey, Hostel, do you have some links where it can show you like a visual representation? Because I'm feeling a little scatterbrained listening to this. I'm trying to kind of hope that you put up the video so I can rewatch it and see if I understand it better. But yeah, just wondering if you had any links.
And specific to what? Because I do have links for things, but it's not all like, I mean, you're going to have to be specific on what you want to be linked to, I guess.
Well, one of the links to the selling puts, the call puts, and then another link to this Roth account investment.
So look on my channel. Everything I've made up until this point, everything I've discussed up to this point is there in video. So if you, and it's all on YouTube, right? So I've already put everything, I have a YouTube channel, and any educational content that I create goes there, right? So the stuff that I've discussed so far is there. Now, simple understanding of selling puts and or selling calls, it's not there. But the wheel strategy are both of those together, right? So I could probably make a video on just selling puts, and I could probably make a video on just selling calls, which I may, because as Green Pineapple said, he kind of was confused. So maybe it'll be beneficial to everyone that is interested in CSPs and covered calls to make just separate videos, so that it's, I can go more in depth on that. And like I said, the Roth stuff, it's there on the channel. If there's questions you have after you look into the spreadsheet and there's a video in there that says why I think Roth IRA is the best, right? And it kind of goes over a lot of what I've been talking about here. So I recommend you watch that as well. That's very beneficial to understand Roth stuff. And like I said, after you watch it and you download the spreadsheet and you go through a couple of these things and you still have questions, you're more than welcome to come back here and ask them.
All right, thank you.
No problem. Okay.
Hey, this isn't a question. It's just a quick statement. You guys should be charging way more than $50.
Don't say that.
All right, I'll shut up.
Well, we thought about it, and we're really not here to make money, right? And that's the thing, I periodically say this, like we open this to educate people, right? We want the rest of the world to not have to work a day job. We want everybody else to be able to learn how to make money like we have learned, but it took me years, right? We want to get it to where it benefits everybody else to happen within 3 to 6 months, right? There's a couple of people here that I've taught certain things, and they went from kind of treading water or losing money to being successful and making solid returns. And they know in their, to themselves that in 5 to 10 years, I'll be a millionaire or pretty close to it, half a millionaire at least, right? And I don't need membership money to be successful, right? I don't need anybody's money to survive, right? I mean, that's not the goal of the server, right? And like, if we need y'all's money to survive, then what we're selling is bullshit, right? So, think of it that way, right? I mean, if anybody out there is trying to sell you
Very
something
true.
for a high price, then they're selling you bullshit. They're selling you snake oil is what they're selling. So it's like,
It's true, man.
I don't need it. I mean, we charge a small fee because it does take out of our time, right? That there is that. But as far as trying to make $1,000 off of somebody, I mean, there's like that guy Jeff Bishop on YouTube. I'm the #1 option trader and blah blah blah. And he sells his courses for $9,000. How the hell are you #1 when you're selling your courses for? That's how you're #1, because you're hitting people over the head. You're not actually teaching anybody anything. I mean, maybe he does, but it's not worth $9,000. I mean, if he's flying private jets and has mansions, why does he need to charge people $9,000 for a course?
Right.
I mean, we started this
Yeah, before I
thing.
joined this Discord, I almost paid like $3,000 to someone, and then he charges like $600 a month after that. Now take it like he's making a killing, and he shows all the proof behind it through his swing trades or through his options, daily trades and weekly trades. But at the same time, I'm like, man, like I'm not just going to jump right into that, right? So I was like, $50, what the heck? See what's in here. And like within the first hour, I told my brother, dude, you gotta jump in now, because he's jumping in stocks right now too. But yeah, I mean, this is by far the best. I did a whole bunch of research on YouTube. It's a bunch of influencers and talking bobbleheads,
Right.
But
right.
I'm so glad my buddy told me about this, because like this is by far the best I've seen for stock and option or whatever. Whatever you're getting into, stocks, options, whatever, it has all the information. So
Right. I mean,
pretty awesome.
and the beauty about it is most servers out there, like, you don't get live channels. You don't get live lectures. You don't get these kinds of things that we're doing right now. You can get these servers where they got channels and alerts. I mean, I've paid $2,000 to be in a service before, and I did learn some stuff, but it wasn't worth 2,000. It was worth 200. And I
Right.
paid $2,000 for it, and when I have a question, it takes the guy 48 plus hours to answer it. And I'm like, by that time the trade's toast, So I was pretty upset with that because I'm like, and they got a forum where it's members helping members, and the actual owner doesn't even engage, and that irritates me. So like,
Right.
part of why the two owners that started this, when I joined, we all had kind of the same mentality of trying to teach people and not rob them, right? Because it took us so long to learn, and if we can help others learn in way faster time, that's the service that we're providing, and that's the thing that we're getting out of it, is helping people better themselves. And if and I believe in, like, um, if I help somebody out of the kindness of who I am, I believe it'll come back to me. I just have that manifestation in my mind where doing good creates good, right? And that's kind of where the server, I feel like it just multiplied rapidly, because that's the mentality that we've got. We're not interested in really making money. I mean, yeah, we want to get paid for some of our time, but at the same time, it's not about just making money off of people. It's about giving them the tools to where they don't need to pay for this service, right? That's our goal. It's for you to learn enough to where you don't have to pay no more, and you can go do your own thing. Now, granted, a lot of the tickers and the information that flows through the server, you kind of get ahead on some of the trades, or things that you wouldn't have been paying attention to. I mean, I've thought about, like, if I were to leave this server, for example, all the information that I get on a daily basis, I may not see it when I'm by myself, right? So it's kind of a community in that sense where I can, while I'm here, I'm able to see things that I didn't normally see. There's multiple people in here that are doing similar things as I am, where we can all utilize each other so that we can all benefit together, versus this dude's charging $9,000 and he's just gonna make his money with or without whatever it is that you're doing, right? He could care less if you're learning. We all want to kind of grow together to where, when you find a play, or this guy, or whoever finds something that looks fantastic, and then they start sharing it, then everybody else is looking at it and saying, "Oh, this is a great play," right? So I mean, I've got 2 or 3 people that I talk to on a regular basis, and they toss stuff at me every once in a while. I say, "Hey, what do you think about this?" And vice versa. When I find something that I think's solid, and I'm talking to them, I'll say, "Hey, you should look into this one." We all make money together, right? So that's the
Right.
goal here. I mean,
That's cool.
I didn't start rich, right? I mean, I started at $700, and I've got $80,000+ now in my account. So yeah, it took a little while, but Rome wasn't built in a day. So it takes a little time until it becomes what you're after, right? And now that I understand how to do it, and I'm very confident in what I'm doing, I know I can do it in 10 years or less. Guaranteed I can be a millionaire in 10 years. Like, I know that for a fact. Now, 5 years is a little aggressive, but that's my goal. So I know what I can do, and then I set a goal for myself to beat it.
Right. Right on, man. I actually do have something I can share with the community. This would be like a whole nother type thing, but I can share it with you guys, and it's pretty much how I'm making some passive cash flow right now. It's no scammy bullshit. But yeah, it takes capital to get into it, and it's better than real estate games. But I love to share, and if you feel it's worthy to share with the community, you can. And
Well, I guess
pretty much,
DM me about it, and let me know what it is you're talking about, and maybe we can turn it into something on the server, and if it's worthwhile and you got a lot of knowledge on it, maybe we can turn it into something that you can benefit on the server, like maybe free premium or something like that. So I mean, we're always looking to expand how we make money, and if there's people out there that can bring value to us, and specific like whatever it is you're talking about, if that can bring value to the server and everybody can make money, then that's something we'd be interested in and potentially employing, right?
Yeah, for sure, man. I'll shoot you a DM and let's hop on a call here soon because it takes a little more explaining than just a few messages back and forth. But we'll set up a call sometime.
All right, that works.
Awesome. Hey, again, man, appreciate all your time in this. But I'm getting started off on the right foot, so I really appreciate it.
Yeah, of course. You're welcome. All right, anybody else got any questions? Well, I guess I'll end it then, since no one has any more questions. Been at it for a few hours. As always,
Thank you, Hostile. We appreciate it.
yeah, you're welcome. As always, I'm glad you guys joined this. We're happy to educate anybody that's happy to learn. So hope to see you again on the next lecture and Q&A and any other live thing we got going. So everybody have a good night.
Thank you, Hostile.
You're welcome.